Hello, and welcome back to another, specialty episode of the Kohrs Show. As you could tell, we're in a slightly different setup today. We are in the Rumble offices here in Toronto. It's a beautiful sunny day. First of all, my apologies for missing the morning show. I wanted to be there with you, but honestly, knock on wood type of situation. I just got off the plane, saw how the market was doing today, and I'm actually kind of happy that I missed today. So, hey, I hope you crushed it. I hope you made a buttload of money, and I want to break down a little bit about the overall market. Yeah, we're going to talk about some of the earnings, what's happening, what's not happening, but obviously, since it's a specialty show, you might be kind of figuring out that we are here to talk about Rumble, ticker symbol RUM. We are here for Q2 earnings of 2026, and this one in particular is going to hold a special place in my heart because we're here to talk about what's going on with Rumble and really the Quake AI side of things. Now, for those of you who need a quick recap, and yes, I'm going to give you a summary of this in a little bit, but what you really need to know is previously, Rumble was running with Rumble Cloud, and for a little bit, there were some murmurs talking back and forth of what's going on with Northern Data. And if you don't know what that is, picture 9 data centers, 250 megawatts of compute as AI is really ramping up. So maybe a better analogy, and I've used this multiple times, even sitting right here, is there's a gold rush going on. This particular gold rush is the AI gold rush. And we know in gold rushes that, yeah, some people strike gold and they do great. But you know who really crushed it? The people selling the shovels. And right now, people selling compute, well, that's the modern era of selling the shovels in the gold rush. So we heard about this. I got really excited. Northern Data really liked what was going on. And it was in mid-June. It was either June 15th or 17th. I want to say the 17th, but feel free to fact check me on that one, that the deal was done. So finally, Northern Data, from a legal, corporate, fancy schmancy business perspective, was under the umbrella of Rumble. And now this is going to be that first earnings, since that deal is officially done, that we are going to get those numbers. We're going to have an idea of where this ship is sailing in the future. And of course, for any of those of you who have specialty questions of what this means, what it doesn't mean, yes, we're going to be listening to the earnings, but after that, we have the opportunity to be sitting down with the founder, the CEO, the chairman of Rumble, Mr. Chris Pavlovski, so he will be joining. So here's the plan, just so we're all on the same page. First of all, you should be smashing the like button, you should be sharing this stream, you should be getting your grandma to watch the show because this is going to be a very important one. We're going to find out really what the next AI leap is for Rumble. Really, we're talking about the future of Rumble. So very excited about that. So like it, share it, do whatever you need to, carrier pigeon message. I don't really care, but get everyone tuning in. From there, we're going to be talking about a little bit of the overall market. Just so you know, the Rumble earnings call is going to be at 5. And of course, we're going to be tuning into that. Just wanted everyone to know. And then right after the earnings call is when Chris is going to be joining us. So to start off the show, like I said, just wanted to prep everyone up for what's happening, what's not happening. Then a little bit of a discussion of the overall market. More than happy to field any of your questions for individual companies. Hopefully, it's a little bit more AI related, leaning one way or the other. And then from there at 5 p.m., we're going to be tuning into that earnings call. And right after that, the CEO, Mr. Chris Pavlovski, will be joining us for your questions, my questions, and everything in between. But I think this is a very interesting time, not only for Rumble as a company, but what's going on with the AI trade. Just last week, we hit a new all-time high in the S&P 500, the overall market. The NASDAQ didn't technically hit a new all-time high, but it's awfully close. And then the small cap sector did. So overall, the stock market is looking really, really good. And unless you've been living under a rock, you know that this is being fueled by the AI craze. And then recently, we've been getting some of these AI numbers. Some of them really good. Some of them made, I don't know, how many times did we see the headlines of like, is the AI trade over? So as more and more information comes out, we're all doing our best to kind of sift through this information to see what's what, who's who, and what's going on. But I want to go on record saying that I personally believe this AI trade is alive and well. I see that people like to call it the AI bubble. I think it's nothing like that. And then obviously they try to refer to the .com bubble. And if you ask me, those comparisons just fall flat because instead of just having magical, mystical, made up revenue on paper, there's actual products, actual things are being built, actual services are being purchased, actual products are being used. So in my mind, this isn't a bubble. This is just like truly the new age of technology. We're in the new chapter. And the question is just how big is it possibly going to get? And that kind of brings me to what I think is going to be interesting about this conversation, because recently, as in the past 2 weeks of our life, we've been hearing a lot of these AI numbers. I mean, we all heard what's going on with Micron, what's going on with SanDisk. The memory play has really much been in focus. On the larger scale, the chip plays, NVIDIA, AMD, Broadcom, people have been focusing on them. So we've been having a lot of upscale and downscale conversations here of what's happening. And I believe that this one today, why we are here, Rumble, is just going to be another one. Obviously, it's a bit more of an upstream in this world. It is the one selling compute. So I'm excited to see where this is going, what the numbers are going to be. And obviously, I'm most excited to see if we can get any, I guess, indications of where this is going. Kind of looking for those guidance numbers. Going to be very excited. What do we have? What's up, Dorks? I do appreciate you joining in. Folks, thank you, thank you, thank you. What time is it? About 4:15. So we have roughly 45-ish minutes to kind of break down the overall market, the situation. And this week is going to be important. If you woke up early this morning and then saw the market today, you're going to know that vol was a little bit up, markets were a little bit down, oil was a little bit up. And this is all happening as we're basically waiting for inflation numbers. So the big question of the week for the larger overall market from a macro perspective, what's inflation? That's going to be it. So we're going to find that out a little bit later on this week. That's going to be the major thing as it relates to the overall market and obviously monetary policy. I need to remind you, a lot of people are asking what's going on with the Fed fund rate. That's been the big thing. And remember, there is no Fed meeting in the month of August. Yeah, we're going to have the Jackson Hole Symposium, which is where a bunch of fancy schmancy people meet up in Jackson Hole to discuss it. But the next actual FOMC meeting is going to be in September. Right now, because of the recent reports, remember on Friday of last week when I left you, we ended up getting those unemployment numbers. They were bad, which was then actually kind of good. So unemployment came in a little less than expected, but the jobs, we added less jobs than expected. So when there's concern about the strength of the labor market, well, that's the last time that the Fed wants to really put pressure on it. So they're probably not going to jack up rates. And that's exactly what we saw. A while ago, this was about 1 or 2 years ago. We kept talking about how we were in the upside down when we got bad economic numbers and ended up being good for the stock market. We're not fully back in that mode, but we're a little bit back in that mode where if the market gets an indication that the Fed's not going to raise rates, which might be coming from the fact that the job market is a bit soft, which is what happens when you are not adding as many jobs as you thought you would, that's exactly then the situation where, okay, no Fed hike, which was more than a 50% opportunity or chance if you look at call sheet / poly market. Now that it's not so likely, well, all of a sudden, because of those weak job numbers, the Fed rate hike is less likely. And then bada bing, bada boom, we rip to a new all-time high. And I guess this is just one of those sobering reminders that the stock market and the economy are very, very related, but they're not the exact same thing. I understand that it conceptually feels a little bit weird of you're like, what do you mean the economy is weak and we just hit a new all-time high? Yeah, that's exactly what I mean. The stock market and the economy are very, very related, but sometimes what's good for one is not necessarily good for the other, and it has to come to interest rates and inflation and the devaluing in the dollar, and that's honestly going to be a multi-hour lecture that I think would be boring to you, would be boring to me, and also we just don't have enough time right now. So just wanted to give you guys an idea of the larger picture, what's going on in terms of, I guess, more of the medium-sized picture, if you will, whatever this saying would be for that. Right now, it's obviously the AI trade. And then if we're going to get very hyper-specific, it would be about the Rumble earnings today. So that's kind of the larger picture. Right now, I do want to kind of turn this over to you. We're going to dive into a couple specific things. If we could switch over the screen here. I do want to let you know, Rumble earnings, obviously, that's going to be happening today. The call does start at 5. I have it ready to go. We're not going to be missing it at all. We're going to be tuning in live to that. Once again, that is at 5 p.m. And then right after that, that's when we have the opportunity for you to actually have a conversation with Mr. Pavlovsky, the CEO of the company. So whatever's on your mind, let it fire. But I have a sneaky suspicion that this is going to be heavily related to what's going on in the world of AI, because as you can see from Rumble's own investor relations page right here, Northern Data Group reports Q2 2026, including the advertised fair value movement of contingent consideration. Basically, the deal was donezo. We knew that happened in June. They updated it. They were obviously telegraphing it for a while, saying, hey, the paperwork's being filed. We're waiting for approval. That's a done deal. But now this is the first time, and why I'm so uniquely excited this time around, this is the first earnings where we have the real numbers to talk about. This isn't the hypothetical, if it happens, oh, back of the napkin math. It's not that anymore. It's a done deal. Quake AI, is alive and well, and now we have the actual numbers to talk about. So that's going to be happening at 5 p.m. So yes, that means we do have a bit of time to talk about the other things going on. So just wanted to let you know that, yeah, it's still the AI trade. I mean, I know the overall market, not necessarily the best today, but we're not that far away from an all-time high. We made an all-time high on Wednesday of last week. And yeah, you might be complaining a little bit that we didn't continue today, but look at this ripper. The market saved itself at the end of July, absolutely exploded, new all-time high. And ever since then, we were just going sideways, AKA consolidation, which means if you're selling premium, congrats to you, you're probably making a killing. But if you're still ripping calls or puts at this moment in time, well, nothing really that exciting is going on. And if you want to know why, I could just show you here. I don't have this tab open, hang on. Just to show you why everyone is waiting. It's just for later on this week, Wednesday morning, right here. Let's get rid of that. You could come to investing.com. We also have it on the locals page, mattkohrs.locals.com, of all the major events, but you're waiting for CPI on Wednesday of this week. So everyone is kind of awkwardly stuck in this consolidation pattern. Very quickly, just to kick off the new week, the second trading week of August, not much happened today. The S&P 500, slightly red. The NASDAQ 100, a little bit more red. I do want to call out that both of these still have these downside gap fills. The S&P 500, if you're trading SPX, downside gap fill to 7,610. For all my swing traders, that's very important for you to be paying attention to. We can hit that. I want to be clear. Me calling out these downside gap fills, that doesn't make me bearish. I think it would be crazy to be bearish in the market right now because we're literally at all-time highs. And if you've watched this show for any moment of time, you know that historically I've repeated saying new highs beget new highs. When the stock market hits new highs, if you were to kind of look at the clustering of that data, that's exactly what happens. They're all clustered together. So the fact that we hit a new high, I would assume that the data we have previously is going to play out once again. New highs get new highs. So with that being said, I am bullish. It would be crazy not to be bullish, in my humble opinion, at this moment in time. But I still want you guys to know from a structural, technical perspective, there is a downside cap fill. So maybe a little short-term play there, or even better, be patient and wait for that to fill. And maybe it's a long opportunity. Once again, these are just some high-level thoughts. I'm not your mom. I'm not in control of your money. Just something I want to call out to all of you. And we see a similar situation in the NASDAQ. There's a downside gap fill on the Qs to 701. Once again, this is a strong move. It wasn't a new all-time high. It was darn close. Something to point out. Obviously, the bulls are in control. We are trending up, higher highs, higher lows. We're on top of all the EMAs. Yes, the AI trade right now is still crushing it. We'll get into some of these individual stocks, of course. But I just want to let you know, yes, technically, you could look at this downside gap fill. Small cap sector, the same day last week, did hit a new all-time high. This will actually bode well specifically for Rumble. Remember, Rumble is now in the Russell 2000. Very quickly, Bitcoin is doing absolutely nothing. It's been doing nothing ever since early June of this year, going sideways, a little up, a little down. The hot story there is just Michael Saylor did sell some for MSTR, but beyond this, it's just not really moving. So the news there is not much. Obviously, the belle of the ball today is Rumble. As I've said a gazillion times in this show already, I'm personally very excited to get a better understanding, the actual numbers of what's happening with Quake AI, obviously their data center compute play. When this is happening, it's kind of an interesting time in terms of price because it's right at its breakout level. It's right at that 50 EMA. Will it turn the momentum around? Obviously, we're going to be finding out very, very shortly. Obviously, in terms of AI plays, you have the granddaddy of them all, NVIDIA, not at the all-time high, very close, downside gap fills, but overall momentum is strong. SpaceX, I'm bringing this up because when I was doing some research on SPCX, I know a lot of you tuned into the earnings call for SpaceX last week. And all of a sudden, I started to really think about the similarities between SpaceX and Rumble. Now, I know when I say that, at first you're like, Matt, you're just kind of being sarcastic. You're being a little bit facetious. I don't see what's going on. How are there comparables? Just give me a second. I will kind of make it a bit evident. I'm not joking around. I think there's a lot of interesting things going on. But the most interesting thing that I want to talk about with SpaceX is some of the commentary from Elon Musk. And specifically, how much is it? How much is the compute actually worth? Like per watt, how much money can we actually talk about? And he had some pretty high numbers. He was talking in the realm of maybe 30 to 50. And if you really dive into the numbers, well, that's quite a bit higher than what we saw in the previous numbers from not only Rumble, but other players where they're like, okay, per watt revenue per year, maybe it's around 6 to 7. So all of a sudden, the numbers that people got excited about with AI, the new kid on the block, the new kid, SpaceX has been around for 20 plus years, but obviously recent IPO. So that's why it's the new kid. They're actually making the argument that even though AI is trading at a pretty high premium right now, their argument is that it could maybe 5, 6, 7x from here, obviously on the compute play side of things, which for potential hyperscalers, which obviously Rumble's leaning a little bit into that now, becomes even more exciting. So a little bit of development there that I want to get a bit into. Broadcom, I'm basically just doing my job to show you that SMH, which remember, this is the ETF that's going to be hyper related to these GPUs, these semiconductor plays, it's sky high. Is it at the all-time high? No, because a little bit of the recent drama has shifted to plays like Micron and SanDisk, more of the memory, but it's all wrapped up in basically the same thing. So right now, if I had to give you, I don't know, a ChatGPT summary of what's going on, things are very elevated. They're not red hot. They're slightly below that, and we're coasting sideways as we're waiting for the next batch of numbers. I would believe that's the most fair, honest way to describe what's happening as of August 10th, 2026. A little bit of a pullback from the all-time highs, and now people are saying, okay, what is the next move? So with that in mind, we're going to find out the next move with Rumble, ticker symbol RUM, very, very shortly. And just to kind of show you where that one is at, I just had it up a second ago. Currently trading at $6, just above $6. We know that it's at that 50 EMA on the daily, so we're waiting to see if it can actually successfully get that breakout. And I think that's going to be pretty apparent when we tune into this call here. So that's the skinny on the situation. I do want to talk a little bit about positioning and just kind of where the big money is at and what they've been deciding to do. So for those of you who maybe felt a little bit of withdrawal from me showing you the big options positioning of the day, this is just kind of where we're at. I wanted to show that to you. Obviously, we could circle back to that. More than happy to answer specific questions on that. But before I do, my apologies. I did miss a lot of your things. Very quickly, could we click on those super chats or the Rumble rants there in the top so we can directly answer some of those? Can we? Yes, I feel bad missing them. Remember when he wore duck shirts back in the day? That was the craziness of the, I guess, retail traders in 2021. You know, sometimes we have to upgrade from the duck shirt to the duck. Should I go for a full duck jacket? I'm willing to do it. I'm willing to do it. Shout out. I appreciate that. And what's this other one here? Oh, Rumble Rick gifted 50 subscriptions. Shout out Rumble Rick. Folks, everyone say thank you. And if you were one of the people who got the 50 subscriptions, how lucky. How lucky, how lucky. Chaos, you're going to make the jacket, the blazer with the ducks. Hey, we can make it happen. I mean, it feels as if a little bit we should be pivoting to maybe like AI ducks, like maybe a little bit more of the Terminator vibe. But I appreciate that. Okay, so with that in mind, I felt bad missing any of those Rumble rants. Any specific questions before we dive into the call and some of these other, like I said, these like positional things that I think are worthwhile to discuss? Any specific questions? What happened to TENX? I don't know. Are you just pitching another random penny stock? Yeah. Oh, a therapeutics. Oh, you're pitching a random pharmaceutical play. This is what happens. Just so you guys know, statistically, 9 out of 10 FDA trials at whatever stage, they fail. So most of these pharmaceutical companies, unless you're a huge Pfizer, a huge J&J, where they have like this financial moat to protect it if they have a failed drug, a lot of these other companies are betting all on one drug, maybe two. So if they end up not passing FDA, like I don't even know what the story is, but I would assume it was just because of one of their drugs failed, if I had to guess. I don't really care. This is the one subsector that for me is really outside of what I deal with. I have no particular edge. I cannot tell you when I read the documentation on if one drug is going to do well or not. That's just not my area of expertise. My chance of being successful trading pharma plays is 0 to nothing. And if I had to play it because I have no unique knowledge of what drugs will or won't do well, I would just short every single one, because the odds are that most of these companies, whether good or not, I'm not saying if this is moral or not, most of them just do not pass. So for me, this is the one subsector that I'm the most far out of my depth on, and I end up not playing it, but just seeing these time and time again. This is kind of just how it plays out. So that's TNX. XRP prices, Ripple. If you ask me, I've said it before. Some of you took personal offense to it. Ripple's a test of intelligence. People who are still in it and think that it's going to redo the entire banking system are dumb and don't know what they're talking about. And then there's the other people who just avoided it, or the smartest people actually shorted it. But XRP, I mean, I haven't even seen it in a minute. They have futures on it now. What's it doing? Yeah, it's just getting absolutely destroyed. I mean, the arguments with Ripple, like it's just random stuff. Like it's horrible. The security is not there. They've changed the ledger. They're not redoing the banking system. I don't know who needs to hear it. And hey, if you're in it, I'm not rooting for you to lose money. I'm trying to help the people who didn't put money into it to not put money into it. If you're in it, I hope it magically bounces one day, maybe on a political update, and you could get out maybe with a little bit of green, maybe a little bit of break even. I'm not betting against, well, I wish I bet against you. I don't have a play on it. I don't have a horse in this particular race, but just understand, it's just another crypto thing. I mean, right now, crypto's been under a lot of pressure. I would say if we looked at it in terms of the odds of which has the best chance of surviving this quote unquote crypto winter, it is Bitcoin. Bitcoin has the highest chance of survival. Does that mean it will survive? I don't know. That's not how odds work, but it has the highest chance of survival. So anything that's not Bitcoin has lower odds. Now, we don't need to break down a full stats class right now. Bitcoin has the highest chance. If you're saying you think another one's going to survive, it's higher risk, higher reward. If you are right, you have a bigger payday. But understand you're also taking on more risk, and the chance of survival is that much lower. So maybe you agree with that, maybe you don't. In my heart, I think Bitcoin has a real shot, just because I think people are getting tired of fiat currencies and the endless devaluation, debasement. Like, yeah, I think that there's a good reason to have a currency outside of the control of government. But I don't necessarily think that means that we need 500 of them, and which is why I think deeply that Bitcoin has the best shot. We have to wait to see how it comes out of this crypto winter. Fingers crossed that it can survive. It comes back even stronger. But obviously at this exact moment in time, it is fighting an uphill battle. But I do believe, I want to go on record saying this, that if you were to wait about a year from now, if we were talking in late summer of next year, I do think it's going to be trading at a higher price. But once again, that is specific to Bitcoin. I think there's a lot of other quote unquote meme coins or just altcoins that are not going to get out of this. I just don't think that they're going to survive this. And I think the communities who were supporting it, they're not going to be able to withstand the hit. And all of a sudden, so many of these are community based. We saw that previously with AMC, that when the community just leaves, that's the price doesn't recover. So we saw that with AMC. We saw that with GME. When the community is gone, the price just does not come back. It's really, really, I mean, even think about Doge or Shiba. It's extraordinarily difficult to capture lightning in a bottle one time, no less doing it a second or third time. And from a retail perspective, I find that people try to do that time and time again. They're like, well, AMC did go up. Dogecoin did go up. So like they should go up again. Folks, like the perfect storm that you had to have to come together on the first time, like if we just look at the odds of it, extraordinarily rare. And then to say that it should be a second or a third time, hey, I hope if you have money in it, I hope that in the future, one day you could come into chat and say, Matt, you were wrong. Ha ha ha. I made a bunch of money. I hope that that happens. But if we're here just to play the basic odds of it, it's probably just not going to. I did already traded Adobe, JBYC. I can't say your name. That will probably get me canceled somewhere. So we're just going to use acronyms from now on. You love trading Adobe. I'll look at it because it seems like you've been making some good money. Oh, Adobe actually is looking. This is a stock that I'd never look at. I never consider. There's just too many stocks to always interpret all the time. But this one's been on a nice run from 190 to 270. You're crushing it, and I hope you make even more money off of it. Should I sell all of my Haktua coins? You know, I might be proven wrong here live. I said that Bitcoin might have been my only favorite crypto play. Haktua has a real shot, folks. Maybe put it this way. If you haven't yet invested in your kid's college fund, maybe you should take all of your money and put it in that. And I don't know how many of you are interested into doing a third, fourth, fifth mortgage on your house, but if you haven't already, I mean, maybe you should and put it all into Haktua coin. I think that I try to really stray away from giving financial advice, but I think that's just a layup. Like back in the day, you got Kohrs stocks, Apple, Microsoft, GE, Caterpillar, stuff like that. I would say that Haktua is probably the modern age Berkshire Hathaway, not only in potential returns, but also in just pure sex appeal. I know that's a hot topic thing to say, but Warren Buffett, Haktua, it's probably those two. There's no difference in my mind between those two whatsoever. All right. Are there final questions on today? I do want to break down a little bit of the flow, the positioning, maybe a setup for the rest of the week, some of those interesting opportunities, but more than happy to take some of your individual questions. If I know I miss you in the morning, and I know some people come in and they have important questions. So I do feel a little bit bad. How many mortgages is too many? Probably double digits. You probably shouldn't mortgage your house above 10, but if you're 9 or below, I think Dave Ramsey would agree with that. I'm pretty sure he would agree with that, but I don't know. Maybe we should ask him. Maybe we should call into him. Was gifted a membership by Rumble Rick. Shout out to Rick and congrats to CJR. Folks, very, very helpful to have those memberships. 50. That's a big one. Honestly, I think that might be the biggest one on this channel. We'll have to fact check that, but we'll have to send Rick a fruit basket or something, folks. And obviously, if you did that, you should thank him. All right. More people I can see on the numbers here are coming in. Just so you guys know, Rumble, we're here for Rumble's earnings. That will be at 5 p.m. Eastern. So we have about 20 to 30 minutes before we really shift gears to Rumble. And I want to be hyper specific about this, diving into what in the world is happening with Quake AI. Quake AI is the combination of Northern Data and Rumble Cloud. Right now, yes, I know Rumble is commonly thought of as a free speech video platform, and that is 100% what it is, but now there's other pillars to the business that personally really excites me. Obviously, I'm hyper supportive of free speech and everything that entails. Honestly, at one point, well, actually 3 points, 4 points when I was terminated 3 or 4 times from YouTube, Rumble was obviously a very welcoming home for me. So yes, that will always have a special place in my heart. But for traders and especially for investors, you might be thinking, what's the next big thing that has the potential to really be impactful on the stock and the stock price? And in my mind, and maybe I'm right on this, maybe I'm wrong on it, I think by the time the history is writing the books of this one, I will be right. Quake AI, very, very excited to know what's going on with the 22,000 plus GPUs that Rumble has under its control, the business agreements with Tether, where AI in general is going. Very, very excited. So once again, that call is at 5 p.m. Eastern. If you're tuning in for this, we will 100% be doing that. We're just obviously doing a little bit of a larger market breakdown as we are waiting. Is MKE coming to interview with Chris? If not, request it. Don't know who MKE is, but MK is interviewing Chris, and I feel like as we're only one letter off, so if we round up, I think that one's going to be good. All right, maybe Turf Dog. Those are some choice words that you feel like saying to the YouTube audience. I barely started using to make thumbnails for my channel. At least Rumble suggests a kind of stream for people. With that, I mean, obviously, it feels like right now, in one way or another, all roads come back to AI. But actually, we had some conversations here that Rumble is continually using AI to improve the algorithm, the suggestion. So it'll just get better and better. Shout out. That's cool, Polish. All right, cool. I don't want to miss anything. Let's talk a little bit about what happened today. I know, actually, before I do it, how did you guys do on these sim accounts today? I want to ask. To be completely honest with you folks, I think if I had to trade it, maybe I would have been able to catch this short at 1050, but just like in a moment of transparency, honesty, whether I was trading TPT or Tradeify, I think I might have tried to go short too early around 10, and maybe I would have gotten caught up. So like, as much as I wish I could tell you that I would have absolutely destroyed this short at 1050, absolutely destroyed this short at 1230, there's a chance that I would have been a little bit of an overeager beaver here at 1020, got blown out just for it then to go my way anyway. And then I probably would have got tilted and really, really angry about that. So maybe I should actually be happy that at that moment in time, I was on a little bit of a plane ride, and that particular plane ride did stop me. So I wanted to break this down. I wanted to kind of be honest. Like, I want to say that I think I would have caught that, but like, I would have just been so excited by the sell-off in the morning that any pop I would have gotten into, and at 1020, I would have thought it was really smart, and I would have been trying to ride it just for it to be a fake out at 1030, 1040. So I hope you guys were better than me. Honestly, I hope you guys somehow avoided this. I don't know how it did or didn't do for your accounts, but just trying to be honest about it. RUM stock has been dead money for 5 years. If you held, we'll just trade RUM in and out for future trades. Well, that's the thing about expansion and consolidation. A lot of stocks will do nothing until they do everything. And right now, I mean, that's a fair criticism. The stock has been going sideways, but also with that, that's actually a perfect opportunity to sell premium. I know that's a bit more of an advanced topic, and if you want to get into the details, I do have that on the channel. We talk a lot about it in the Discord, but on that note, there's people I know, shout out to Sean if you're in here right now, who their net basis on Rumble is actually a negative value because they've sold so much premium. Remember, I know it's thought initially when you don't know anything about the stock market that you can only make money when it goes up. You learn a little bit of things here and there, and then you realize, oh, I could actually also make money when something is going down. And then the people who are really getting into the game, they realize that they can make even sometimes more money when a stock is going sideways. So once again, if you like Rumble the way I do, I am not an active trader of Rumble. And I guess just for transparency's sake, I want this out there. I am invested in Rumble. I have Rumble shares. I don't know the last time I played calls or puts. I don't even know if I ever have, but if I did, it was years ago. I do have Rumble stock, but remember, on that stock, you could always sell premium. There are people who have a net negative basis because they've sold so much premium and they've taken all that credit against their Rumble shares that they're just sitting pretty no matter what's going on. So yes, you can make money when a stock is going sideways, but I've hope that this sideways grind that we're seeing in Rumble is hopefully the market's about to reward it with it, what it's doing in the world of AI. That's what we're sitting here to kind of listen to kind of figure out, and to obviously ask the guy who's at the helm of the ship when Chris will be joining us a little bit later, roughly an hour from now, of what's going on, what's not going on. And yes, he loves fielding the questions from you. So a unique opportunity to directly speak with the CEO. And I suggest if you have those questions to definitely be asking in chat today. If you've never been involved in one of these before, what Chris likes to do is we chat a little bit about the recent numbers, and then we turn it over to all of you guys where you could ask what is on your mind. So if that's something that interests you, it'll be happening right after the earnings call today. So just wanted to put that on everyone's radar. I know that we seemingly keep coming back to Rumble right now, and that's obviously for good reason because that's what this one's all about. But because we have a little bit more time, I guess before I get into kind of the positional update and what did or didn't happen today, not related to Rumble, are there any specific questions? What does it mean to sell premium? Premium is a term in the world of options trading. You have call premium and you have put premium, and that's just either the price, that's the value of it. That's how much it costs to either buy or sell at that moment in time. So it's specific to the world of options traders, but then you can use that. People sell call premium against their shares, or if they have cash secured puts, they can sell some puts and things like that. It gets a little bit complicated. And it's not necessarily the premise of this show, because we'd have to get into we'd really have to get into the weeds of what it is to actually be trading calls or puts and what side you want to take it from. But just in general, if you need a little bit of homework, if you get absurdly bored tonight or maybe this weekend and you want something to look into, look into selling premium. If you come from the world of sports betting, the best analogy, without getting too deep into this, is basically equivalent to over and unders. If you want to sell puts, that's equivalent to do overbets. If you think the stock will be above price X by whatever date, you would sell puts, and that's equivalent in the world of sports gambling to overbets. And then if you sell calls, it would be equivalent to underbets. So just by whatever date, whatever price, if you think it's going to be below that price, you can get paid if you are right on that announcement. And so for the underbets, you would be selling calls. So once again, sell calls for the underbets, you would sell puts for the overbets. And that's probably the best, I guess, analogy I can come up with real time without getting like too steep into it. How do you set up option profits to go against share price? There's various ways to benefit off of options regardless of the stock against share price. Well, you just do the opposite one. If you think a stock is going to go up, you would benefit from either buying calls or selling puts. So then obviously the opposite is going to also be true. If you think something is going to go down, you would benefit from buying puts or selling calls. So it's just whatever. You can express whatever opinion. That's actually one of the coolest things about the modern era of brokerages and everything in between is whatever you think is going to happen, you can express that. If you basically, you can make money off of any directional move or no directional move on anything except for going backwards. And at that point, you're talking about some like Marvel level time dilation. I don't know. That's outside of my purview. But if you think something is going up, down, or sideways, or a little up or a little down, or within a certain range, you can make money off of all that. If you think it's going to be within a certain bound, you can make money off of that. If you think it's a big move in one direction, but you don't know the direction, you're like, no, it's either massively up or massively down, you can make money off of that. You can, in the modern era, especially with all these products between futures and options, and you could do crazy stuff like iron condors and butterflies, this, that, the other thing. You can make money off of any potential directional movement besides literally just backwards. That's the only one that quite yet we just haven't figured out. So just to, I guess, break that down. What's the play? Well, the play for right now is paying attention to Rumble. In terms of interesting setups, I mean, I'm still a big fan of what's going on any AI-related thing. Recently, I thought there was a solid risk-reward setup on Broadcom. This is the second biggest processing chip play, the biggest being NVIDIA, but Broadcom, I just like this breakout and the hold. Palantir, it's getting some life. Back to the conversation when someone said, hey, Rumble's just going sideways, it's a bit boring. Look at what's going on with Palantir. Sometimes stocks are very boring until they're not. Palantir just going sideways at 140 and then out of nowhere exploding from 105 up to 174. This has nothing to do with AI quite yet, but let me show you what's going on with Texas Roadhouse. Texas Roadhouse, another stock that was just doing nothing and then all of a sudden explodes. So stocks can be dormant. If you subscribe to this Wyckoff theory of investing, it's referred to as accumulation. You're looking for accumulation followed by some sort of like distribution, continuation, blah, 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 the boring words. But look at Texas Roadhouse, just nothing, nothing, nothing. And this whole time, they were slinging those golden buns with cinnamon butter this entire time. But then it was just more recently that the market rewarded it for obviously running a pretty solid business, and it started to explode from 160 to 207. So, necessarily going sideways, like I wouldn't in my mind assume that that's a good or a bad thing. It's just, it is what it is. Price is going sideways and there's no larger market force, whether on the aggressive bull side or on the aggressive bear side, to get it to really break out of that particular range. And for those of you who know about Don chain trading, or maybe you read the book Turtle Soup, that's what people look for. They look for a bunch of sideways movement, and then on the breakout or the breakdown, they look to play it. And kind of an old adage is the longer that it remains sideways, not doing much, well, that means that the next move is going to be that much more explosive. So actually, I kind of take back what I just said of it not being good or bad. Well, actually, in the case of something like Rumble, where we have a lot of sideways accumulation, well, obviously, if the team surrounding me right now can execute well on this AI play, that's a lot of, I guess, potential energy that is hopefully converted into kinetic energy to the upside. But that's what we're going to be diving into in this particular chit chat. So I hope that makes sense. Obviously, if I confuse anyone, feel free to ask a follow-up. Texas Roadhouse went up because I got off Ozempic. Just you, Bioman, like you specifically bought so much Texas Roadhouse. You know, for all of us Texas Roadhouse investors, we should say thank you. I don't know what you're talking about, but if you're correct, someone, you should be right. What are we? I think I missed that one. I meant based on the stock price. Not every stock is expensive. That's another, if you're new to the world of trading, It's not appropriate to compare Rumble's $6 to NVIDIA's 217 because not every stock in the world has the same amount of shares out in the world. So really the most fair comparison is market cap. Something could be $10 and could be overvalued, and something could be trading at $200 and can be undervalued. Now, maybe you were just never told that before, and at first you might think, wow, that other one is 20x in just this hypothetical situation, 200 versus $10. But that's not how we compare things in the world of the stock market. In the world of the stock market, you should look at obviously just total market cap. And the quick computation for that is the amount of shares in existence, known as the float, multiplied by the share price. And it's just because it's not stagnant. It's not like every company in the world has the same amount of shares in existence. So sometimes the float is huge and sometimes the float is really, really small. So in terms of is something cheap or not, it's not based off just the share price. You would want to see how many shares are in existence. And then honestly, you can get into kind of a deeper, I guess, philosophical discussion from there and start looking at things like its revenue, its price to earnings, and really know if something overvalued or undervalued. And that's probably why you've heard about terms such as PE ratio, the price to earnings, to know if something is like over or undervalued. And that's just like one way to do it. But don't fall for the trap for just assuming because something has a low value that it's cheap and something having a high nominal value is expensive. That's just not a fair comparison for the market. I got screwed like that 4 weeks ago. If you roll it, you short a lot, it gets renewed for 100, except if it assigns that was a reverse split, you only get a small portion. So when there is a stock split, which honestly, depending on the direction you go, that could be a good or bad thing. So historically, Tesla has splits because it got so expensive that they wanted it to be a cheaper nominal value that they did split. So all of a sudden, if you own one share at $500 and they did a 5-to-1 split, well, you would then have 5 shares at $100. So you still have the same nominal cost investment, but you just have more shares. It's equivalent to splitting a $10 bill into 10 $1 bills. You still have the same amount of overall value. You just now have a different amount of bills, but they still add up to the same thing. So that's a split. A reverse split is exactly what it is, the reverse split. So all of a sudden you could have 10 $1 bills and it goes to one $10 bill. So even though you have the same value, generally the market actually really treats reverse splits kind of not so positively. Generally, when a company is doing a reverse split, it's doing it so it doesn't get delisted. There's a lot of companies that when they fall below the $1 mark, they're at risk of getting delisted from the NASDAQ. So they end up doing this reverse split. So the nominal value goes higher because that's just like one of the rules to stay listed on the NASDAQ. And then NYSE has equivalent rules. So it's not always true, but a lot of the times when you hear reverse stock splits, it's not a good situation. But to your question of what happens when you have options on that and then they announce it, the process is referred to as being made whole. And that's actually when they do properly update the option contracts as well, just to share that with all of you. Okay. Good questions. I think we're getting kind of like a little deep in the weeds here in some of the specifics, but of course, like at one point people you don't know it and then someone has to teach it to you. And then from there on out, you do know it. 100 shares equals one lot equals one contract. In the world of options, yes, that is as of now. And I don't know why we don't have micro option contracts that maybe represent something like 10, but yes, one options contract, whether a call or put, represents 100 shares of the underlying. So if you buy one RUM call, you're talking about you're in control of 100 shares of Rumble. Same thing with puts. They represent 100 shares of the underlying. Sometimes you have non-normal contracts and that can happen with splits, but that's like actually a very, very rare thing. Just so you guys know, we have 10 minutes to go until we hear from Rumble and their earnings. How's it doing in post-market? Nice recovery. At one point, someone sold it down to 605, but we're bouncing back up to actually above where we closed. So waiting on those numbers now. And actually, let's go to their Twitter page. I want to just see if we have any updates from Rumble. Rumble Group reports record second quarter in 2025. Revenue is up 61% year over year. All right, let's dive into these details, prep up a little bit. Let's see if we could hit the major things that happened. So once again, if you are invested in Rumble or have considered it, this is going to be very important. So record revenue, 40 million, up 61% year over year. Record revenue for Rumble, excluding Northern Data, 21%. So that's even stronger. The fact that they hit a record, of course they were going to hit record revenue with the acquisition of Northern Data because it's basically printing money. But even without that, they still hit record revenue. So that's very strong. Close the acquisition on Northern Data. That is now basically what's being referred to as Quake AI. Additionally, approximating 250 megawatts of unmonetized 2027 target. That's potentially a lot of money. If you dive into their estimates previously, they thought basically on an annual revenue basis per watt was anywhere from like $6 to $7-ish. If you listen to Elon Musk, and we're definitely going to be getting into this conversation, he's arguing it's worth anywhere from $30 to $50. So if you do the conversion on that, that's potentially $250 million annually of revenue. Targeted capacity representing 3 billion plus AAR. Okay. Forming guidance beginning. So, okay, we now are officially going to be getting guidance from them. Initiating formal guidance beginning the third quarter of 2026. Revenue outlook of 87 to 93 million. This is a large jump. If you paid attention to any of the previous earnings numbers, generally it was in the realm of, okay, we're talking about 25-ish. So now clearly we're seeing a massive increase. All right, so here are the key highlights. Close the acquisition of Northern Data AG on June 17th, 2026, securing approximately 85% of Northern Data's outstanding shares. Renamed the parent company RUM Group, and now Rumble Cloud, as you probably heard it, with Northern Data is referred to as Quake AI. And for those of you who need a quick recap on why the Northern Data deal is such a big deal, well, it's because it has 22,000 GPUs. And on top of that, already very nice business agreements with Tether, the crypto company, representing over $100 million. Record quarterly revenue of 40.4 million, up 58% quarter over quarter and 61% year over year. Northern Data contributed $10 million from the date of acquisition already. Wow. From June 17th to, I don't know the exact end date, probably as of either today or maybe last week, already $10 million. So we'll have to ask a little bit more about that, but very impressive no matter how you slice it up. Record revenue of 30.3 million on Rumble Video Business, up 19%. Very impressive. With the close of the acquisition of Northern Data to provide greater visibility and insight, the company is initiating formal guidance beginning with a revenue outlook for the third quarter of 2026, 87 million to 93 million. This is a large drop, or a large jump, huge jump, almost 100 million. Wow. Quake AI now has approximately 250 megawatts of unmonetized capacity targeted for 2026, which we believe represents a $3 billion plus annual run rate opportunity. That's crazy. Because even 250, $1, that's 250 million. And then depending on what multiple you think it's going to be at, I mean, that could be a big amount of money. So, I mean, even at $4, you're talking about $1 billion. So they must be just doing, I guess, like we could do the backwards math on that. But I mean, if you believe Elon and what he was just saying about the Rubin, it could honestly be even quite a bit higher. So this particular line is one that I'm very interested into asking Chris about and getting some of the details of this number. And really, I would think that there's a pretty compelling argument that it honestly could be even more. So very excited to talk about that one. Signed a multi-year agreement with Together AI to deploy NVIDIA B300 GPUs cloud capacity. Okay, once again, really committing to this AI play. Personally, I think that's incredibly strong. Quake AI continues to have stronger performance and demand for its existing GPU estate with utilization of approximately 85% for the quarter. 85% is roughly going to be the max. I mean, if your goal, if you're thinking, oh, they're going to scale it up to 100, that's not really just how data centers work. There is always going to be, you're not going to really hit 100% capacity. This is sky high, pretty good. Maybe they can move the needle a little bit there, but that's pretty much maxing it out. So 85, that's impressive. They've already made 10 million since the acquisition was formally agreed to by regulators. 250 megawatts of unmonetized capacity targeted for next year, for 2027. Wow. So they're thinking $12. That is honestly depending on who you believe or who you don't, if you do this math out, they're basically saying that they're getting $12 per watt. And some estimates, when I say some, I'm talking about Elon Musk in the SpaceX earnings call. For everyone who listened to that, he's thinking that it could be anywhere from 30 to 50. And basically he's really leaning into the Jevons paradox there for anyone who needs something to search as we're waiting for this. But what a jump. Look at this. For the 3 months ended in June, so comparing quarter to quarter, this time last year, we were talking about 25 million. This time, 40 million, an increase of 61%. That's very, very impressive. All right, what else do we have? Yeah, the cost is going to go up. Okay, interesting. Yeah, I guess at this point, I don't know how there's any way to not say this so directly or to think any way. Rumble, very much, yes, it is still a video platform. Many of you are watching on Rumble right now, but I think we now have indisputable evidence that this is just becoming a straight up AI play. It's an AI play almost with a video platform as a kicker, or I don't know necessarily which one you think comes first in this. Obviously, historically, chronologically, yes, the video platform came first, but I think in terms of potential exciting stock movement, this is a video platform meets strong AI infrastructure play. These are some big numbers. 250 megawatts of unmonetized capacity targeted for next year. So not only is that a lot, maybe 3 billion plus is their estimate. I think we're going to have a good conversation I think that could potentially be more. And we're talking about it pretty soon for 2027. So, and then even this stronger plays. All right. Well, just so you guys know, that's the skinny on it. I'm sure we're going to hear some of these, but we're going to get a deeper conversation from this call, which will be starting in about 1 or 2 minutes, 2 minutes and some change. So if you are tuning in, we actually have some other numbers as well coming across the board. Let me just double check some of these. UPWK, Upwork, double beat going down on the double beat. There's some other earnings that are hitting the wire right now. I just want to share it just in case. What is this one? OpenAI has completed a $7 billion buyback of employee shares ahead of the potential IPO, so they know what's going on. Rare Earth, double miss. ASTS, I see some of you in chat. That was a double miss as well. HIMS, apparently their international revenue just exploded. QUBT, so for my quantum plays, miss on EPS, beat on sales. Archer, they ended up, they hit expectations. Sales beat, but EPS was at expectations. HIMS actually dumped on the double miss there, but I guess their international sales. Rocket Lab looking interesting as well. Plug had a double beat. And I think those were all the major earnings as of today. Yeah, those were all the major earnings. So not as many massive mega cap reports as we had last week, but still very, very important ones. Very, very important ones. Can Chris get me that 10K? I was back when Rumble and Video won. That was like 5 years ago. I don't know what you're talking about on that one. Back when Rumble had the Rumble and my Video won. I don't know what that competition was. I have no idea what we're really talking about. WTF, good nums, and the price isn't doing squat. Well, remember, stocks don't react to what happened historically, and that's what earnings are. Earnings are a snapshot of what just played out. If you're looking at the most recent earnings, the stock is a forward-looking mechanism. So that's why the guidance discussion is so much more important. We've seen it before where stocks beat on both numbers and go down. We've seen it where stocks miss on both numbers and go up. And the answer to why that happens is the stock price does not care about what happened. They care about what's about to happen. Very, very important. But with that being said, let's turn this on. All right. We have a little bit of the, elevator waiting room music, but the earnings call will be underway. And of course, we're going to be playing that very quickly. Can you guys hear this? Everyone in chat, whether you're on Rumble chat, YouTube chat, MySpace chat, whatever chat you're on right now, can we get a thumbs up, thumbs down? I just want to make sure the volume levels are coming through. And then, of course, we can readjust for you when they actually start the call. But this, it's going to be starting momentarily. And then, of course, we're going to have the stock price up as we are listening to it to see what kind of happens in real time.
Good afternoon, ladies and gentlemen, and welcome to RUM Group
All right, here we go.
2026 earnings conference call. At this time, all lines are in a listen-only mode. Following the presentation, we will conduct a question-and-answer session. If at any time during this call you require immediate assistance, please press star zero for the operator. This call is being recorded on Monday, August 10, 2026. I would now like to turn the conference over to Shannon Devine, Investor Relations for RUM Group. Please go ahead.
Thank you, operator. I'm here today with Chris Pavlovski, founder, chairman, and CEO of RUM Group, and Mike Massey, CFO. A press release detailing our second quarter 2026 results was released today and available on our investor relations website. Before we begin the formal presentation, I'd like to remind everyone that statements made on this call may include predictions, estimates, or other information that may be considered forward-looking. All forward-looking statements are made only as of the date of this call and should be considered in conjunction with the company's cautionary statements in our earnings release and the factors included in our filings with the SEC. Future company updates will be available via press release and the company's identified social media channels. I will now turn the call over to RUM Group's founder, chairman, and CEO, Chris Pavlovski.
Good afternoon, everyone, and thank you for joining us. Last quarter, I told you this would be the last call before Rumble meaningfully entered the cloud and agentic AI era. Today, I'm glad to say that transformation is complete. On June 17th, we closed our acquisition of Northern Data, securing approximately 85.2% of its outstanding shares. And with the deal closed, we renamed our parent company RUM Group, Inc. We now operate two distinct synergistic business units, Rumble, our video platform, and Quake AI, our new cloud and AI infrastructure business. Combining Rumble Cloud with Northern Data's estate of roughly 22,000 NVIDIA H100 and H200 GPUs. To kick off our first earnings call as a combined company, I'm thrilled to announce that our revenue for the second quarter was $40.4 million, up 61% from $25.1 million in the second quarter of 2025. I'm proud to say it's been nearly 5 years since we announced going public, and we are still posting all-time records for our company, and we anticipate that we'll post another all-time record in the next upcoming quarter. I want to spend a minute on the strategic logic here, because I think it's important for everyone on this call to understand where we are headed. Rumble spent years building its own rails as a free speech platform, our own bare metal compute, our own CDN, and the network to deliver low latency streaming at scale. Combine that now with an AI compute as a service business like Northern Data, and you get a compelling end-to-end AI infrastructure company. That's Quake AI, and it's going to be the financial engine of RUM Group going forward. On execution, Quake AI's existing GPU estate is running at more than 85% utilization today, up sharply from where it stood not long ago. That improvement reflects a deliberate focus on customer support, software, and infrastructure as a service execution. And it's what gave us the credibility to win the next stage of growth. In June, we signed a multi-year agreement with Together AI to deploy NVIDIA HGX B300 GPU capacity, establishing RUM Group as a credible, independent provider of large-scale AI infrastructure outside the traditional hyperscaler ecosystem. It validates that our customers trust our execution enough to partner with us, and that NVIDIA is willing to support us with the supply allocation to keep growing. The next stage for this team is monetizing our 250 megawatts of power targeted for 2027. The grid connections and agreements that put us in position for real deployment next year. That capacity spans our marquee 180 megawatt powered site near Atlanta, Georgia, one of the most important internet points of presence in the country. We continue to see strong customer momentum as well as meaningful progress on the site development where the substation is already built and the transformers are on site. In addition, we also have a smaller site in Pittsburgh and 2 European sites, roughly 50 megawatts in Sweden and roughly 20 megawatts in Norway. We continue to see encouraging and unprecedented growth in demand for AI compute as a service, and our customer and demand pipeline remains strong. Simply monetizing 250 megawatts of currently unmonetized capacity represents what we believe is a $3 billion plus annual run rate opportunity for RUM Group. Turning to our video business. Average global monthly active users were 57 million in the second quarter, and ARPU was 48 cents, up 20% quarter over quarter. Our management team's focus is to continue to increase revenue by bringing in brand advertising. Additionally, with the recent formation of Quake AI, we are quickly learning from our AI clientele that Rumble may have a much more compelling monetization opportunity. As the AI industry moves into the robotic era, in the coming years, Rumble's spatial temporal data, otherwise known as video data, becomes increasingly valuable and very important to robotic learning. For example, contextual data, like what Reddit has, is a prime example of the value in today's world of AI. But we believe in 1 to 2 years, this will shift heavily towards video data. And only a week ago, it was reported in the news that Amazon was exploring ways to tap into Twitch's video data. In fact, Quake AI clientele have already expressed interest in our video data. Our team is looking at various ways to capitalize on this opportunity and add another bucket of potential revenue for the creator community. With significant spatial temporal data on Rumble, combined with the AI compute rails we are building and deploying at Quake, RUM Group sits in a very unique position compared to today's neoclouds. Like them, we can offer scaled AI compute, but unlike them, we have a trove of video data and a creator community that can help power the robotics era. In short, we have data, we have the rails, and we have the community to power the future of AI, which we believe is the robotic and agentic AI era. With that, let me turn the call over to our CFO, Mike Massey, who will walk you through the quarter in more detail, along with some important updates on our guidance process and reporting on our businesses going forward.
Hey, thanks, Chris, and good afternoon, everyone. This was a landmark quarter, both operationally and financially. And let me start by walking you through the high-level financials. First, revenue for the second quarter was $40.4 million, an increase of $15.3 million, or 61%, compared to $25.1 million in the second quarter of 2025. Taking a turn to our expenses, we continue to make strategic investments to best position ourselves for high growth in AI. Cost of services were $30.6 million, up from $26.5 million a year ago, driven by higher programming and content costs, as well as the incremental data center expenses from the Northern Data acquisition. General and administrative expenses were $16.3 million, up from $11.7 million, again primarily driven by Northern Data, which contributed $5 million of payroll and other administrative costs. Excluding Northern Data, the remaining increase reflects higher payroll and other administrative costs, partially offset by lower professional fees. Research and development expenses were $6.8 million, up from $4.8 million. Sales and marketing expenses were $10.4 million, up from $7.9 million, attributable to higher marketing and public relations spend, increased payroll, and other sales and marketing related expenditures. Adjusted EBITDA loss for the quarter was $16.6 million, an improvement from a loss of $20.5 million in the second quarter of 2025. Net loss for the quarter was $80.3 million, or $79.1 million attributable to RUM Group Inc., compared to a net loss of $30.2 million in the second quarter of 2025. The year-over-year increase in net loss was primarily driven by $28.3 million of acquisition-related transaction costs associated with Northern Data close, along with higher non-cash depreciation and amortization following the acquisition. We ended the quarter with total liquidity of $220.5 million, consisting of $203.3 million in cash and cash equivalents and 293.14 Bitcoin, valued at roughly $17.2 million. But before I get into guidance, I want to talk you through an important change in how we will report going forward. This will be the last quarter we present MAU and ARPU as headline metrics for the company. Those numbers described a single video audience business, and following the Northern Data acquisition, that's no longer the full picture of what RUM Group is. Beginning with our third quarter report, we plan to move to segment reporting, Rumble Video and Quake AI, each with its own revenue and profitability metrics. I think that's a far more useful way for all of you to understand where we're allocating capital and how each part of our business is actually performing. And it's the reporting structure I'll be building around as I get further into the seat. So that brings me to guidance. For the first time, we are issuing formal revenue guidance. For the third quarter of 2026, our first full quarter reflecting Quake AI, we expect revenue between $87 million and $93 million. We've heard directly from many of you that formal guidance would help you better understand this business, and now that Northern Data is closed, with strong contracted revenue, high utilization, we felt this was the right moment to give you that visibility. Over time, as our forecasting visibility continues to improve, we plan to build this out further, including longer-term views. Building a disciplined, credible guidance process is something I'm personally focused on as we establish our track record with all of you. So in summary, this was a transformational quarter, record revenue, both including and excluding Northern Data. We closed Northern Data and established Quake AI as a leader in AI compute as a service. We signed a marquee agreement with Together AI, and we are now focused as a team on converting our 250 megawatts of unmonetized power targeted for 2027 into what we believe is a $3 billion plus annual revenue run rate opportunity. I was excited when I came on board at the end of March, and today I'm more excited about where RUM Group is headed, and I look forward to updating you on our progress. That concludes our prepared remarks. Operator, we are now ready to open the line for questions.
Thank you. And ladies and gentlemen, we will now begin the question and answer session. To ask a question, you may press star followed by the number 1 on your telephone keypad. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star 2. One moment, please, for your first question. And your first question comes from the line of Tom Forte with Maxim Group. Please go ahead.
Hey, this is Henry Dare filling in for Tom Forte. So I got 2 questions. Firstly, Chris, there's some debate amongst investors as to what happens for the pricing for AI when capacity catches up with demand. I would appreciate your thoughts on that matter.
Hey, Henry, this is Chris. So yeah, there's been a lot of debate about that. The way I look at it right now and the way, what we see right now in our window is that we're still in the early stages of AI. In particular, I think that with inferencing and agentic AI coming on, exploding in the coming years, the demand for AI compute is going to continue to increase. I don't see at this point, any time in the near future, any point where capacity is going to catch up to the demand on the AI compute side. I think it's scarce. It's very scarce, and I believe at this point in time, I don't see any point in which we're going to have capacity meet that demand in the next 1 to 2 years.
Okay, thank you. And this may be too early as you just finished the Northern Data transaction, but I would appreciate your current thoughts on your strategic M&A strategy and types of companies you consider adding moving forward.
Yeah, hey, like you said, it's pretty early in our process in terms of how we're thinking about moving forward in terms of growth. I think right now as a management and leadership team, we're really focused on that 250 megawatts of unmonetized capacity. I think we're always going to look at opportunities in terms of value creation for customers and for shareholders. But, like you said, I think right now we're focused on that 250 megawatts of unmonetized.
Okay, thank you.
And your next question comes from the line of Jason Helfstein with Oppenheimer. Please go ahead.
Hey, everybody. Congrats on giving guidance. And I never say congratulations on a call, so glad we hit this milestone. So just first to dig in, some of the questions I think folks have is, so when you think about kind of getting what you need to, get the compute going, obviously you've gotten the cash now. Just help us understand the challenges around getting the chips, racks, cooling, all the parts you need for the data center. How much has already been contracted, like it's signed, and and just help us understand timing of when that comes online. And then just, if you want to weave into that, because I think most people know, like, that is challenging to get all of the, equipment to get the data centers open. Have you thought about potentially doing the TeraWulf playbook, where basically you run the infrastructure and then the customers bring the chips and the racks? And then I've got a follow-up on advertising. Thanks.
Yeah, no worries. Hey, Jason, this is a record-setting quarter. We hit record revenue and record number of congratulations from you. So it's wonderful. So to your question on CapEx, I think, when we look at agreements like what we did with Together AI, we don't sign the contract and the agreement until we have strong line of sight to be able to secure the right amount of equipment and capacity to be able to put that one online. So to answer your question, you can see from our cash flow statements that this past quarter we had a large uptick in our investing activities, upwards of almost $47 million in investing activities, which is unusual for us. That really went towards a lot of the purchases of that IT CapEx that's going to be necessary to execute that AI compute as a service deal. So think of that as the start of that process, but we feel really good about where we are in terms of our ability to get supply, to be able to ultimately fulfill our obligation for key deals, including the one with Together AI. In terms of your question about the TeraWulf model, which I'll, not to be specific about them as a name, but we sometimes in the industry call this the power and shell model. So the idea, if you have capacity for power in the way that we do, you build the data center, and then you lease it out to somebody on a long-term lease for them to be able to do AI compute as a service. So we actually address some of this in our investor deck. It's a worthy business model, but what we found is the unique ability to deliver AI compute as a service is something that's been differentiated in the industry. It's one of the things that's really interested us and we think is a huge value add from Northern Data. They've been doing AI compute as a service for a number of years. And so just to make that real, we put this in our investor deck, but you can think of doing power and shell as monetized at roughly anywhere from 1.5 million to 2 million per megawatt per year. Delivering AI compute as a service just on the Blackwell generation, we show that delivers at almost 11 million per megawatt per year. So you're talking about orders of magnitude of almost 5x in terms of the value creation when you deliver that AI compute as a service. Now, it's not without cost, to your point, of the ability to be able to secure effectively the AI compute hardware, the capability to be able to actually operate some of the most complex machinery in the world, et cetera. But to me, as a company, Northern Data and RUM Group have really earned that right over a number of years in partnership with NVIDIA. And so we're really happy to be able to take advantage of that 5x monetization opportunity. We feel like that's our business model moving forward, is really AI compute as a service.
Hey, Jason, I'll add into that I think that with the Rubin chipset coming in the next year or two, that even moves up even further on the monetization front. And I think we heard from SpaceX call with Elon, he was quoting numbers much, much higher than that for the Rubin.
Okay. So, but the main point you're saying is that whenever you make a public announcement, you've already secured the basically hardware to do that. So like that's how investors should think about modeling this kind of building as you go with these announcements. So I mean, is that going to be the policy though? Like I guess like in a way, it's almost like a guidance philosophy. So should we assume like every major customer win like that you're going to announce, and then that's how we can think about like the timing of the scaling of the model?
So, first of all, what I described is really how we're going to seek from an operating model perspective. So don't take this as a commitment or a policy. I would struggle with those words a bit. But to your point, and as a leadership and management team, our first job is prudent risk management. So we would not enter into contracts that we didn't feel like we had the ability to or be able to fulfill. So ultimately, having things like supply allocation and certain execution is part of the way we do our diligence before we would sign up for a deal. And then remind me the second part of your question.
Oh, no, that's fine. That covers that. And then just on the ad business, I mean, kind of a nice acceleration on a year-over-year basis. Just can you give us like how much was Tether? I guess the Tether ad commitments impact the quarter, if you're willing to break that out. Thanks.
Yeah, we do have this. I know it's pretty quick turnaround from when the Q came out, but we actually do have this broken out in the Q to show you how much was related to Tether during the quarter. We had roughly $6 million related to Tether, 4.8 million related to Tether in Q2.
Got it. Appreciate it. Thank you.
And I'm showing no further questions at this time. Ladies and gentlemen, this now concludes today's conference call. Thank you all for joining. You may now disconnect.
All right, it does not conclude it for us. In fact, we're just getting going because as much as those boring, fancy schmancy analysts from Wall Street got to ask their questions, you guys didn't get to ask your questions, and that's what's about to happen. So when things get squared away with that official call, in due time, the founder, CEO, and chairman of Rumble, Mr. Chris Pavlovski, will be joining us here. He will be here in person. I have a couple questions. I was taking notes throughout that. Like some things that I think would be interesting to dive into, get some clarification on, and then from there, we're going to be turning it over to you guys, and we have all these nice monitors set up so he'll be able to see the chat in real time. So if there's something that you want answered, basically feel free to spam the chat, and if you catch his eye, if he finds it to be an interesting question, I'm sure he will be more than happy to answer that. So yes, it is important, and I think that there's some CEOs who do this the right way. I think there's many more who do it the wrong way. A lot of CEOs just cater to the analysts, while I'm, on a personal note, very, very impressed with Chris wanting to talk with you guys directly. So cares a lot about retail and the communication lines with you guys to let you guys know what's going on, to be as transparent as possible, to take the feedback, the criticism. I honestly, truly, truly respect it. So that will be starting momentarily. So obviously get your questions ready. We're going to be doing that. But just to kind of go over some of these notes that I have so you guys know where my mind's at as I'm heading into this conversation to get us going. The first thing that jumps out to me is this concept of what's referred to as the Jevons paradox. If you want to look that up, that's going to be a big focal point for me. Jevon, Jevons paradox. Look that one up. But overall, I mean, obviously they crushed it, record-breaking in terms of revenue. But what's interesting, it was record-breaking in terms of revenue even without Northern Data, without the new Quake AI business pillar. So I find that to be very interesting. I want to dive into not only how they were able to pull that off, but I want to get into a lot of this $3 billion figure, because that's a huge jump. We're talking about a company that last year, they were in the realm of $100 million for the year. That was the revenue we were dealing with on a full year, 4 quarters put together. And that's a large jump to $3 billion, but maybe you caught it there. It sounds like Chris and I were listening to that same earnings call with Elon Musk and SpaceX, where the multiple that he's putting per watt is quite a bit higher. So even though $3 billion is obviously a large jump from $100 million, it actually might be under appreciating. And I know that's a crazy thing to say because that's a jump of like $2.9 billion. But if you believe in Elon Musk and his multiple on Rubin and what a per watt compute is actually going to be worth, that's a multiple of 12. I mean, it's just back of the napkin math there. You have 250 megawatts that are targeted to come online next year. So the math there is basically saying it's $12 per watt for the entire year annualized. But then that's not even half of what Elon thinks is going to happen. He's calling out 30 to 50, and he just said that last week. So I kind of want to break that down, and actually that might be where I like really want to bring it. But then also kind of like the Jevons paradox, as one of the analysts was talking about, this idea of what happens when capacity really meets up with demand. I actually don't think it will. So those are the things on my mind, and we're going to be kind of going from here. And I guess are there things that you guys like specifically, like I'm reading chat right now, anything I just said that maybe sparked a little bit of thought that you're like, Matt, please, would you ask Chris this? Would you please intertwine it in your conversation? Like I said, we have 10 million per watt. We have to think 200 watts at Atlanta site. So that's 2 billion if added correctly. What is the cost of revenue? How profitable will it be? But, well, hang on. Are you talking about megawatts or gigawatts? Because we have different multiples. But remember, mega is a power of 6 there, while giga is going to be 9. How many fingers am I holding up, Chris? Well, I would assume 3, but that's not really in this conversation. I wish Rumble had stream advisors that could help figure out what I need to increase views on videos. With that, I mean, I'm not an advisor for Rumble on streaming, but I would say just from my career in streaming, you got to make content that people care about, engaging content. What's the trending stuff? Remember, if you are replicating what you've already seen someone else do, well, the fact that they're already doing it kind of tells you you're probably in the wrong domain because they have that time on you. They've already been doing that thing X, so they're probably better at it. They're probably filling out the space. Just from my own, I guess, notes in streaming, I always got the best benefit in the content side when I did something that I saw other people were just not doing yet. So just a personal tip, I suppose. Oh, shorts. Yeah. So actually, I did look that up during the stream. The short interest as of market today was 19.3%. So basically, how many shares are out on loan? 42 million. They're assuming 25. So that could almost double. So not really up to 40, but maybe 35%. So Ortex is estimating that the short interest against RUM, against Rumble, is 19%. It theoretically could be all the way up to 35. The utilization is almost maxed out. If you don't know what utilization is, it's a ratio, it's a percentage. Basically, out of all the shares that could go out on loan, how many are out on loan? And the answer is 97%. So pretty much maxed out. But remember, when I say out on loan, to take a legal, legitimate short position, you first have to take shares out on loan from someone else who owns the stock, then you short it. So just because you took it out on loan doesn't actually necessarily mean you had to go short. Maybe you took it out on loan just in case you wanted to go short. Maybe you heard something in the earnings like this, and then you're like, oh, no, actually, those were good earnings. I don't want to go short anymore. So just to clarify, just because you're out on loan doesn't actually mean you're short, which is why the shares on loan is coming in at 42 million, but it's estimated about 26 million are actually short. So that's the discrepancy there. Short interest is super high. It's 19%. The market average is sub 5. It is considerable. It's not the highest we've ever seen. I mean, we've seen stocks get above 50, 100, 125. It is possible. And sometimes people get shocked when you go above 100. You're like, how could you have more shares short than there are shares in existence? And the answer to that, it's called rehypothecation. That's like the very fancy financial term, but maybe in more of a colloquial term, it's referred to as daisy chaining. Because think about it. When you want to take a short position, someone owns the stock. You loan the stock from them, you sell it back to the market to take a short position. You create the position by going short. Well, now there's a new owner. That new owner could put those shares out on loan. And then obviously the process just repeats and repeats and repeats. That's why I'm calling it daisy chasing, but like the actual financial term is called rehypothecation. So basically it's the same set of shares being recycled through this loan short ownership, that process time and time again. So right now, could it go above 100? It could. Fortunately for Rumble, it is not above 100 because that's a lot of money betting against it. But you are right to point out that it's still considerably above the market average, which this is just my personal opinion. That's a very dangerous thing to do, 20% short interest, when you are, I guess, basically battling with a company that is fully in the world of AI. This is now very much a hyperscaler play, in my opinion. It's a new hyperscaler play. I think the market thinks, in my opinion, of Rumble as exclusively a video platform, and I believe it is being underappreciated as an AI infra play. Once again, this is my own analysis of the situation. Maybe I'm right, maybe I'm wrong. I have a feeling that I'm right on this one, but I think the market, Wall Street as a whole, they know Rumble, they think of it as a video play, and then that was just kind of it. The conversation stopped for them there, not really keeping up to date on the more recent news, such as the fact of maybe 250 megawatts of AI compute to be sold starting ideally next year. They're targeting next year, maybe looking to go from a yearly revenue of 100 million to potentially above 3 billion. I know this is a lot of potential, but remember what the stock market is. The stock market is a mechanism that is betting on the potential and the odds that that potential is met, missed, or maybe even exceeded. So right now, I think this is one of those, once again, I keep saying in my opinion, I just want to be very clear. This is my opinion. I look at it as a diamond in the rough. I think there's a lot of people who just don't know about this stock, aren't talking about it as an AI play. And I think right now in the larger AI world, I don't think it's going anywhere. I know some people think it's a fad that's whatever in a year or two going to go away. I think it's completely wrong. I think AI is honestly just getting started, and it's just going to be a very common way of life. And I think it's actually going to be even more of a way of life. So that's my breakdown on it. I don't see it going anywhere, but we'll see how it plays out. I think I missed some of these. You're having QQQ. What is Rumble doing to detect bit error rate and throttle AT&T frequency throttles? Rumble, T-Mobile hasn't. That would be a question for Chris. I cannot fairly answer that one. Show and tell your stock chart, please. Which one? Rumble's been going sideways. It's just above $6, and I'm hoping that in the future, as it executes on this AI play, the long-term investors are going to be paid handsomely. Got any layman's language for all the mega wattage? Well, it's a power of 6. So it's a watt, but then a million more. A watt, but quite a bit more. Is Bitcoin climbing back up or no? Actually, similar to Rumble, it's just going sideways. And until it does something, you got to focus your energy on stuff that maybe is going a bit more. The chat, you guys are talking a lot, so it disappeared, but I saw some numbers about Chris not having ownership. I want to be clear, and this is all like in the public, like this is publicly accessible, but Chris controls the full vote. The shares he has like super vote majority. So Chris, not in only title, but also in terms of vote, he is clearly at the helm of this particular ship. And you don't have to take my word for it. Go look into the filing and you could see the breakdown. That type of stuff, you can't hide it. Like if anything, it has to be very easily publicly accessible. So go look into the filings or go trust whatever, speaking of AI, go to whatever AI trust you trust the most and ask for that breakdown. So of course there's other equity investors. As soon as you own one share, you're technically an equity investor in Rumble, but the way that the shares kind of break down and also the vote breaks down, Chris is very much in control. The big problem with Rumble chat is you always get weirdo losers banned from everywhere else. It's an issue. Remember also per community though, you're in control of it. So when we have, as you're referring to, the schizo weirdo losers, we just end up kicking them from here because per community, we get to decide how we want to do it. Chris controls 85%. Like I said, in terms of the vote, he is the guy who decides how things go. Yes, show chart history and explain the ups and downs. I mean, the ups and downs for the entire chart history for any stock, for any time frame, It's the same explanation. Every single time a stock moves on any time frame is just because of where buyers and sellers meet. If buyers and sellers meet at a higher price, it goes up. If buyers and sellers meet at a lower price, it goes down. In terms of retail trading, I find that it's one of these things that as soon as someone explains it to you, it makes sense, but maybe you just haven't thought about it this way. There's no such thing as just selling or just buying. For there to be a seller, there has to be a buyer. If not, the transaction doesn't go through. Same thing with buying. For there to be a buyer, there has to be a seller. If a buyer and seller does not agree, a trade does not happen. So the only thing for any stock or crypto or future or for option, anything that causes things to go up or down is just, are buyers and sellers agreeing at a higher price, i.e. buying aggression, or are buyers and sellers agreeing at a lower price, i.e. selling aggression? That's the only difference. It's just, where do buyers and sellers agree? Maybe a better analogy or maybe a real life example is, think about it in terms of a house. If you buy a house, someone's selling a house, do you agree on a higher price or a lower price? And if you come into agreement, the transaction goes through, and then that's what the house actually was sold at. That's what the house traded at. Same thing with shares. I think it feels a little bit different because shares happen in the digital space, and it's not obviously necessarily a physical good, but that's all it is. It's, do people agree on higher prices or lower prices? And that's what it is. And that's what makes the market so great, is because you have people who are as quick as high frequency traders trading in microseconds, literally trading thousands of times before you could click a mouse or blink your eye or something like that. And then you also have long-term investors. So when people ask, why is something going up or down? Of course, you could properly cite the most recent news. And then logically, you could say, because of the recent news, people are reacting to it. But in reality, to know why something is actually going up or down, you would have to go ask all the people who transacted in that time period and ask them, why did you buy or sell? Was it intentional? Are you a long-term investor? Are you a leverage player such as Leopold getting blown out? Was it a fat finger mistake? Are you just doing your monthly purchasing? Like, there's so many variables. It's literally effectively an infinite amount of variables, which means you're never going to know why like everyone is doing it. How important is formal guidance? I personally find it to be incredibly important, because really that's, if you had a correlation of what moves the stock, whether you're looking at EPS or revenue or something like formal guidance has the highest correlation, because formal guidance is the company, all those people with the insider knowledge of what's happening with their company. It's their bet on where they see it going in the next quarter or the next year, rather than what happened in the last quarter or the last year in terms of EPS or revenue. And right now for next quarter, if you guys missed it, they're actually betting on a very, very large increase in the realm of $90 million in revenue, which is crushing it. Remember, this is a company that as of last quarter, this quarter last year, we were talking about 25 million. So like the multiple, like that's a multiple increase right there. So guidance, massively, massively important. What's taking Chris so long? Is the elevator broken? Well, remember, after these calls, they do like, it's an analyst thing. Wall Street is calling in with more specific questions. And then after that, we get to turn it over to the real show with you guys. If you're new here, don't forget to hit that follow button. Yes, of course, hit that follow button if you are watching on Rumble. Follow away and turn on those notifications. My knowledge is low regarding stocks, but I keep hearing people talk about on Webull about a short squeeze. How would a squeeze affect Rumble? A short squeeze is a phenomenon in which a stock rips higher, and it's because so many people were betting against it. Think about it. Let's just talk about a hypothetical stock, XYZ. XYZ is trading at $100, and someone bet against it, as in they bet it's going down. They created a position by selling a stock, and they have to close it out by buying it back. So it's the inverse of what most people do. Most people buy to create the position, and then they sell to close it out. You could go short and be bearish by doing the opposite. You could sell it to create it and then buy it back, and you hope it goes lower and you profit that difference. If you sell something at $100 and buy it back at 90, congrats, you profit the $10. So anyway, if there's a lot of people thinking it's going to go down, but then the stock does the opposite and it starts to go up, those people are under pressure, and they might be under so much pressure that they need to get out of the position. All of a sudden it goes from 100 to 110 to 120 to 130. So these people who went short at 100 are now down $30. So they need to get out before the loss gets worse. But like I just said, how do you get out of a short position? Well, you get out of a short position by buying it back. buying it back. Coming back to what we were just talking about, that's more of aggressive buying. So it causes the stock to go up more. And before you know it, it's a snowball effect against the shorts. And when there's enough shorts and this phenomena plays out, it's called a short squeeze. If you really want to have your stocks blown off, you should search a term called gamma squeeze, which is another just large natural buyer in the market, but it's prompted because of options positioning and not necessarily short positioning. And sometimes, like back with AMC and Jimmy, you have these play off of each other. You have a short squeeze kind of ramping up a gamma squeeze, and then the gamma squeeze gets ramped up so much that you have a bigger short squeeze, and it just goes back and forth. So a gamma squeeze is a phenomena it's specific to the positioning of options, while a short squeeze is people just literally betting against the stock and then they get it wrong. But once again, they play against each other. So it can get really, really interesting when you have a high short interest and the stock starts going up, and then you have a bunch of people buying calls that end up going in the money. And that's where you kind of get them ping-ponging against each other. And that's when you get huge, huge movements, like AMC going from $2 to 72, like GameStop going from $8 to over 500 if you count pre-market, crazy stuff like that. Remember, people, it's kind of interesting. You're asking this because you're saying, okay, like maybe Rumble will have a short squeeze. That's not necessarily the best thing in the world. It's exciting in the short term because the stock goes up, but remember, fundamentals generally end up winning out. So if I could wave a magic wand, a magic pen here and actually make something happen, I would actually like to see that slow grind higher where just fundamentally it's continually improving and then Wall Street is rewarding it for improving. In terms of these squeeze plays, they're very, very exciting to trade. I've done it in the past. It's a fun thing to do, but eventually fundamentals, gravity wins out, and fundamentals are important. And basically you get this pop and then it comes back down to reality, and then you're there at reality. That's fun as a trader, but not for an investor. As an investor, which is what I am in Rumble, I just want to see it fundamentally improve. Wall Street reward it for that fundamental improvement, and then you just continue that grind higher and higher and higher. Like I said, if I could wave a magic wand, that's exactly what I would be doing. But I don't have a magic wand. It's currently on back order from Amazon. Question for Chris. At some point in the future, if things go terribly wrong or if they go fantastically well, would Chris consider selling RUM if he was made an offer he couldn't refuse? That's a question for him. In the past, when we asked him about that, he's made it very clear no. And I don't want to put words in his mouth, but it seems as if he cares a lot of defending free speech. So I don't think that is likely, but you're going to be able to ask him yourself. Mr. Chris Pavlovsky of Rumble is joining the show as we speak. Chris.
Hey, how's it going?
Congratulations. I was here trying to take notes, and before you know it, I just kept writing record breaking over and over again. Record breaking without Northern data, record breaking with Northern data. The guidance is a record breaking number. It looks like fast forwarding to 2027, that's a record breaking number. Like I said, too much record breaking. So before we get into it, and there's a lot of people who have questions, there's a couple things that jumped out to me, if you don't mind, if we kind of dive into that.
Let's dive in.
Some of your quotes directly from that call was that Rumble itself has the data, the rails, and the community, and that's kind of the TLDR of how you summarize a potential $3 billion opportunity. Can you just dive into that for maybe the people who missed it, or expand on a couple of the things that maybe you think the retail audience should appreciate a little bit more?
Yeah, so what you're seeing right now, and with this guidance that we just provided, is that you're seeing what we're currently monetizing. So we guided to 87 to 93 for the third quarter. And that's going to include the assets that are already monetized in Sweden, our H100s, our H200s, and they're in a bunch of different countries around the world. But what I was referring to in the $3 billion of annual run rate opportunity is the unmonetized assets that we have. And that is that we have a flagship site in Atlanta, Georgia. There's 180 megawatts there. We got 20 megawatts in one place, another 50 megawatts another place. We got about 250 megawatts of totally unmonetized assets. And that is something that once you monetize them and you apply you're kind of seeing the power and shell companies. They're monetizing at a couple $1 million. I think that's like TeraWolf. There's a bunch of power and shell companies out there. They're monetizing at 1 or 2 million per megawatt. If you look at our investor deck, we're monetizing currently our current estate at like 6 to 7 million per megawatt. Wow. But as we move into the Blackwell chips and we move into the Rubin chips in the future, that's only going to go up. And the opportunity with the unmonetized assets is you're not going to be putting H100s back there. You're going to be putting the Blackwells or the Rubins in these new facilities. And you're looking at monetization of north of 10 million per megawatt. So the opportunity there with 250 megawatts is massive. Mm-hmm. And if you look at what other companies are saying out there, in particular, I guess Elon was quoting, he was guessing, I guess, is what he was doing. He was guessing 30 to 50 million for the Rubin chipset per megawatt. I think he said specifically 30 billion to 50 billion per gigawatt of the Rubins. So you got this huge scale of opportunity. And what we're looking at Rumble, like our first, not Rumble, we're RUM now, at RUM Group, is to immediately capitalize on that 250 megawatts, get that monetized, and then start looking at the current estate of H100s. And then we start looking at how we can, increase and optimize that as well. So I even think, it's every megawatt, if you can sell it at north of 10 and you're selling it at 6 to 7 right now, there's a lot of runway. There's a lot of growth. There's a lot of opportunity, and you got to take advantage of that. So that's where we're heads down, looking at how to do that.
So if you don't mind, I want to summarize this a little bit, because I think to someone like you, obviously you're in the world, but maybe then there's a retail investor who's like, okay, there's a megawatts, gigawatts. To summarize, you have AI compute as a service, and the base term here is going to be a watt. And it seems as there's a big conversation of what is a watt worth on an annual basis. So it seems like some of these PowerShell ones, they're looking at 1 or 2. In your previous investor decks, you were in the realm of like 6 to 7 to 8. But then Elon's coming out with these terms of like, no, maybe $30 to $50 per watt. And if I do back of the napkin math of how you got 3 billion on these numbers, you guys are coming in roughly around 12. So some would say that's maybe conservative at $12 when maybe some people are looking at 30 or 50. So I guess my first question is, why do you think there's such a disparity in what people think this is going to be worth? Is it because it's a new field? And I guess also maybe shed a little of the light of like how you guys came to be comfortable with the number that you're at.
Yeah, no, this is like the conversation you're having in the boardroom like every day right now. And
Gotcha.
I'm going to sleep thinking about this. Like, why are they saying this number? What do we
Dreaming
see?
in
How do we
watts.
look at it? Yeah, it's like it's such a debate right now, because
Gotcha.
like you're seeing this industry in this explosion phase. And the explosion is basically, you're in this first era of like, the Anthropics and the open AIs. They're becoming this huge knowledge base with AI. You can ask it anything, it can help you. And it has a lot of value. Like, it's helping a lot. And what these guys are seeing, and what we're seeing as well, is like, we're going to start moving into a new era where it's not going to just be a knowledge base, but it's going to be much more than that. You're going to get into agentic AI, where now you're going to get into this world where agents are going to multiply and do so much more work than you typically see. And then you're going to see agentic payments go through, and they're going to start paying your bills automatically. And AI is going to start doing all this work for you, like taking care of all your bills, your bank accounts, etc. And this is going to have like this exponential effect on demand for compute. And that's where you're kind of seeing this bullish lead to. And then when you think about it, we're going to enter the robotic era soon.
Yeah.
And now, not only do you have all these agents doing 10 to 100 times more compute, having 10 to 100 times more compute demand, it gets exponential. You start having robotics now having this demand, and now they're going to need compute. So right now, when you look at the field and you're looking at it and you're like, okay, all this demand is coming from, just basically a knowledge base, like the Anthropics and the open AIs. We're going to get into this world of inferencing, agentic AI and robotics, and they're seeing this exponential increase. And when you start looking at like how much compute power the Anthropics and the OpenAIs actually need, you're looking at it and you're saying, we haven't even really hit that inflection point. The demand could be like far more than what they even have right now. So that, I think that's where that's coming from. I think that's where this scarcity is really there. You're seeing it in memory. You're seeing it in AI compute. You're seeing it in power. There's just all this scarcity right now, and it's only accelerating. I think like a year ago, we thought, hold on a second, let's put the brakes on a little bit. And not us, but like the market was like, let's put the brakes on. And then these companies keep coming out with earnings that are beating. The money is there. You saw that this earnings cycle, everyone's beating again. Like the cash flow is there. It's just the market is not. It's having a tough time believing how real this AI world is, but it's very real, and that's why you're seeing guys like Elon be extremely bullish, and you're seeing them project what they're projecting. They're really believing in this exponential growth of AI in the coming years. So yeah, our perspective might be conservative, might not be. We will all see how the market goes. But I think that's where the push and pull is like, how fast is this world going to move? And I think once robotics are here, we're going to get into a world where you can't stop this. Like the demand is going to be overwhelming. And we want to be in the right place at the right time for that. And I think like at RUM Group, we have both Rumble and we have Quake. Quake is the Rails, but the data side is Rumble. And that's where, video data and creators like yourself become so important to the world. So when you think about robotics, they're going to need to be able to get to a level to have two-way conversations. They're going to need to be able to navigate around this room over here and do tasks that, a human can do. And in order to do that, it needs to learn. And where is it going to learn best from? It's going to learn best from IRLs. It's going to learn best from video data. You're going to see video data, in my opinion, is going to be a really strong moat for any of the companies in the future, because we have a community of 57 million users watching content, creating content, etc. And I think that is an enormous opportunity to the creator community. The creator community could be an extremely valuable part of the robotic era when it comes to learning. And I think certain creators will choose to participate, certain creators will not. Obviously here at RUM and at Rumble, we are really looking at this. Like, how can we make it an ability for you to give your content to teach robotics or whatever company wants to use it at your choice? I think that is, I think the revenue there for creators could far exceed the revenue that you would make on advertising. So I think we're going into that era. It's still a little bit in its infancy, but that's like kind of the vision that I'm seeing right now. And that's kind of where, I want to put RUM, the RUM group in the right spot to take advantage of that. So that's what we're looking at right now. And like, these are like the question you asked, those are questions we're having internally. Like, where is this market going in a year? Where is it going in 2 years? And where is it going in 5 years? And are we in the right position? And we believe we are.
I could definitely tell you and the rest of the team are very, very excited, and it's for good reason. Like, you guys are helping write the rule book. This is a blue ocean thing. We don't know the waters we're getting into, and you guys are seemingly getting prepared to navigate it and hopefully navigate it well. But I can only, you're already kind of turning my brain here of like, yeah, I could see robotics, and you were saying like at first, and even on the call, you're like, okay, it was trained on Reddit, so just written stuff, so it was not in the 3D space, and then robotics is the next thing. But then of course there can be things that robots can do that we can't. So then there's like a whole nother level to it. And when you guys, and I've said this so many times to you directly, when you guys are selling the shovels in the gold rush, you're like, cool, like, let's just see where this can go. And obviously you had some very interesting commentary, but then even the questions you guys were getting asked from the analysts, he was talking about capacity meeting demand, and I get it. He's a fancy person working for Wall Street. But from what I can see and just seeing how some of this has played out historically, I actually don't know if it will. So there's this term that I actually learned from a Rumble short. It's called the Jevons paradox. And it's this concept that we would think that as something is more efficient to use, it's going to go down. But in reality, it goes the opposite way. When we get efficient with a resource, the usage explodes. So historically, people would talk about books, and then you have the Gutenberg press. They would talk about coal, and then all of a sudden locomotives. Now we're here with AI, that as it goes up, it's probably going to be almost self-perpetuating. And I just read this stat of how much more code is being written. And then you're kind of pointing out, like, okay, if you guys are helping with agents, then agents are creating other agents to do all this stuff. It just explodes. It's a massive multiple. So I guess I can understand why you're up at night, just because as you're diving into it, you're like, well, this is possible and that's possible. So I, as an investor, am excited. And I hope a lot of people listening to this are like, could kind of see how like this truly is a big deal. Like, I understand people are like, oh, AI is just an AI fad. It's like, I don't think it's a fad. I think this is just the new way of life, and it's the biggest thing.
It's not a fad. And I think, there's going to be a tipping point where people are going to realize this is like incredibly valuable. And I think, and we talked about it on the last live stream, and I'm more bullish than ever on it, is that when AI starts helping us with our health, when it starts solving health issues for you and really improving your health, I think that's going to be like a major tipping point where people are going to like, okay, this has like some real benefit to real life circumstances. It's not just knowledge, but it's now taking that knowledge and helping you in the health world. I think that's like a real major tipping point for AI. And I think that's like around the corner. We're talking like, I think 6 months to a year, we're going to see that. That's much before the robotic era. And I think that's when everybody's just going to really buy into it in a way that we're not, quite there yet. I think there's a lot of negative narratives around AI that people have really grabbed onto. But I think when it starts, helping your kids or helping your family, and they're able to overcome disease or overcome something with respect to health, I think that's where you're going to see a little bit more. You're going to see the market really pay attention and say, hold on, this is like going to get exponential. This is going to get really big. And it's going to be really valuable to people in general.
Yeah, not only to assist with health, but also I could take the moral standpoint of doing that, but also very, very cheaply. Like, you just have to have a phone and be able to ask it questions or do whatever. So there's people who maybe very unfortunately like couldn't get that help, and now it's like just a phone conversation away. Like that's so impressive, incredibly impressive.
No, it is. Like I have had a little personal story with AI in the last couple of weeks. I've had like I've had a little issue that I've wanted to solve, and it solved it for me within like 2 weeks of working with it, giving it my patterns, and I realized, wow, I shouldn't eat this as much because it's not that great for me, and it figured that out and it helped. So
wow,
I think that's gonna end up being pervasive in society, and people are gonna really take advantage of that, and that's gonna really tip the scales. And right now we're living in a world where, back to the moat of Rumble and RUM Group, the rails are gonna be in I really do believe countries that build around AI are going to be like the new, basically like the oil countries, like Saudi Arabia. I think countries that adopt the position where they're going to build huge data centers, they're going to invest heavily into power, and they're going to help power this, are going to really take a huge edge for their country in general. It's going to help contribute to tax revenue. It's going to help contribute to electricity cost. It's going to help contribute to all kinds of different things. I think the benefits here are so enormous on what AI-powered data centers could do to a community. It's going to be something that is going to take, small little countries that can cut through red tape and get it done really fast, and they're going to be able to become very big, very fast, kind of like what oil did to a lot of countries. And on the flip side, as with RUM Group, we're everywhere. We're in Europe. We're in the United States. We're looking everywhere. We want to put our flag as many places as possible that are going to be great to put our flag in. And in addition to that, I think on the other side you have Rumble, which really offers something different than the neoclouds. The neoclouds are all doing this. They're doing all the AI compute like Quake is doing. But what we have that no one else really has in the neocloud space, now SpaceX granted has this, Google has this, is that we have a creator community. We have millions of people on Rumble that are contributing content and watching content, and that now have, in the future, we're going to make it and create the ability for them to contribute to AI robotic learning, which is something that none of the neoclouds have, and is completely a competitive advantage to us in that neocloud space. So I'm really excited about that. It was like something that we even had a discussion with one of our clients on the Quake side, talk about this to us and be very interested in this. I think this is like going to be such a game changer for the creator community in the next 1 or 2 years that that is also an amazing part. And imagine what you can do as a creator if creators can monetize with their data and their content in the AI world for robotic learning. And let's say theoretically it could be more than advertising. That's a whole different game for the creator community. So I'm really looking forward to that. I think that's like a very, very underappreciated future thing that could happen here, and that will happen in the industry, whether Rumble capitalizes on it or somebody else. I want to be first, but I think that's going to be a really, really big thing. I think having data, video data, and having the rails and the mechanism to deliver all this together is the future. You can have the rails, and I think you're going to be awesome. But if you can have the rails and have the community that's going to deliver the data for the rails and for the other companies, I think you're sitting in a very competitive position that will be very rewarding for the future.
I mean, you definitely make a compelling case. So is it safe to assume that for the next couple quarters, the main focus of RUM Group as a whole is how to capitalize on exactly that, of how to combine those three and grow them off of each other?
The main focus, and I would say most of our energy right now is to get that 250 megawatts monetized right away. Because that is $3 billion of a revenue opportunity for us that we want to capitalize on effective immediately. We do that, it makes everything even better at RUM. But with that being said, hopefully that gets done sooner than later. The things that once we're done that, then we want to optimize the current capacity that's monetized, and on the Rumble side, we really want to focus on that as well. So bringing all that together is step 2. And we have 2 great teams in 2 different businesses right now, so they can run at the same time. So that whole Rumble group is already thinking about that and already working on that as we speak. How it's going to be deployed and what we're going to do still remains to be decided, but that is something that whole team is already fully focused on. And you can expect a lot of change around that and how that's going to work for the creator community. Now, change that is optional to the creator, not forced, and change that's going to be at the creator's discretion. But we think that opportunity and what we could deliver on that side of the world at Rumble could be profound for the creator community and profound for the robotic era that sits in the Quake side. So yes, combining those two and providing a suite for the world that is far more compelling than the typical neoclouds is definitely a top priority. But the absolute top priority right now for us that we're working on day in and day out right now is getting that 250 megawatts that's unmonetized monetized.
Man, I really appreciate how you're painting that vision, and I wouldn't be so surprised if there's some other CEOs taking a couple notes right now, maybe stealing some of your ideas. But with that being your main focus of 2027, could you explain a little bit of what is the biggest hurdle? Maybe for people who know nothing about AI and data centers, what's the hurdle that you're okay, this is where a lot of the team is putting their energy to make sure it goes smoothly?
Yeah, so picking the right customers is there's a lot of demand and there's a lot of different customers, and getting the right customers to come into these facilities on a long-term basis is something that we want to evaluate. We want to make sure we pick the right customers for our megawatts that are going to stick by us and that are going to grow. And it's always great to be with a growing client that you can grow with. So that's definitely something we're looking at, and obviously financing these deals are something that we got to look at, because building out 250 megawatts is going to take some capex, and that's something that's very important to the strategic vision of the company and moving it forward. So, and then you got to buy the GPUs from NVIDIA, et cetera. So, and pay for that. So that's kind of all of our focus right now is on that. I wouldn't say there's any glaring hurdle in terms of the business. The hardest part, which is demand usually for a business, is definitely there. So
Maxed out.
that is like it's a very odd thing because like when you got to go sell ads, you got to go convince them to buy the ad. Here for AI compute, you have basically lineups of people that want to buy AI compute and they want it today. And a lot of this stuff, like 250 megawatts that's unmonetized, can't give it to them today. You got to build the data center, you got to buy the GPUs, you got to put them in there. It takes time. So, and I think what's really unique about RUM Group and Quake in particular is that our 250 megawatts, we already got the substations there. We already have for that in particular in Georgia and all that 250. We can deploy this in 2027. That's rare. Most companies are looking to deploy in 28, 29, 30 for their AI compute and energy and power and shell. But for us, we have a lot ready already there, and we can capitalize this in late 2027. So that I think is a very unique proposition to the unmonetized assets that we do have.
Is the door potentially open, assuming this goes well and you clear the hurdles that are there in 2027? Is there a chance that you guys become an even larger hyperscaler play? Like if there's opportunity for more data centers, or is there a different way that you want to take the business after doing this in Atlanta in 2027?
It's a great question. So we are definitely exploring land and power around the world as we speak. Like that is something we're exploring, and we're looking to see what's available. And we're going to be opportunistic when we find the right places. The right environments. So the answer is, we're 250 that we need to monetize right now. Once we do that and that's done, then we start looking at expanding that portfolio and where we can go. And we've already begun trying to identify places for that.
Very
so.
Interesting.
I've never been shy about how bold we want to be, but we want to be a hyperscaler. We want to compete with the hyperscalers in a major way. And we want to have a portfolio under RUM Group that's going to be competitive to all the big players. So our ambition is there, 250 megawatts plus the capacity that we already have is pretty considerable. I don't remember off the top of my hand of how much Elon's already got monetized, but it's probably 1 or 2 gigawatts. So when you put that in perspective, it's sizable still. It's not SpaceX size, but it's sizable, and I think there's paths for us to get even bigger if we choose to go those paths. And as we continue to monetize our current asset, which I think is, when you look at the market, we're monetizing at 6 to 7 million on the current megawatts that's monetized. For Quake, I think there's even room there to grow. In terms of what we're seeing in the market today, if you take a look at the market and the price per GPU per hour in the last 6 months, it's been on a nice slope upwards. It's where that goes, and these are for H100s. Where that goes, it remains to be seen. But like even right now, like there is room to optimize our current estate that's monetized if these rates continue to go in that direction. A lot of these neoclouds started increasing their rates, so because power is becoming quite scarce. So it's an interesting place to be. I think from the time we went public, when we launched Rumble through CFVI and the SPAC, it's been an amazing story. If you take a look at the revenue increase from then to now, and you put those curves in, and you look at the other big companies like Meta and stuff like that, it's pretty remarkable what we've achieved. I think it's quite underappreciated, but lots ahead of us. A lot of really exciting stuff ahead of us.
It seems like a good problem to have in terms of every day you, the board, and the team are almost trying to pick what potential opportunity to pursue next. This seems like I can understand how it's daunting and how you're up at night, but this world, like we're on this new frontier, and you're at an interesting place to really seemingly take advantage of it. So obviously, congrats on the performance, but on a singular, I guess, selfish level, I'm excited to see where this is 2, 4, 6, 8 quarters from now, because it feels like you guys, like I said, you're at the helm of a very interesting ship in blue ocean waters ahead. So that is awesome. Do you want to turn it over a little bit, take some of these audience questions and see what we have here?
Sure, we can answer some questions. We always love doing that.
All right,
what do we
folks,
got?
let them rip. Whatever is on your mind, feel free to comment away. Rumble Rick, appreciate you being here. A little bit earlier, Rick sent it 50 gifted subs.
I've
I'm
been
gonna have to send
noticing
him.
like a lot of tips in Tether and Bitcoin flying through the chat as I've been looking at the chats. Okay, there was something about, it already flew by my screen, but I think I caught it. It was from RZEM, asking about Allbirds, I think. Okay, so where is it? I can't see it. Okay, there it is. Okay, I think that's, well, without mentioning names, I guess we can have a little chat about that. I think it's a good question. I think like there's been a lot of companies that change their names that, like Allbirds, they changed their name and they had a huge appreciation in the stock value because of that. But at RUM, it's a different story. Like if you go back to 2021 and you look at the decks that we put out when we went public via SPAC, infrastructure as a service was always like top priority to build out. One, because it was existential for Rumble, we needed to do it, but like it didn't make any sustainable sense to build an infrastructure just for Rumble. Like it's very costly. It's a lot of work. You got to have a lot of engineers. We built our own CDN. We built our own storage. We built everything. And like we continue to still build everything. Even our own, like a lot of our live streaming is built from scratch. So it was something that we've always done. And I think because of that, it's been very underappreciated over the last 5 years that we've built all this infrastructure, like real infrastructure. Like I was in data centers personally plugging in wires with my CTO in the early days in 21 and 22. And like that's a really underappreciated of the technical capacity and the engineering capacity of the team here that built what we built. But it was always our North Star to be very profitable in infrastructure as a service. Like we've always wanted to do that. We thought running a cloud business was going to be the profit center of this business. And we wanted to make that happen. And the way we looked at it is that the video vehicle, Rumble, was the perfect vehicle to build that cloud business out because it gives you storage. It gives you lots of processing power for live streaming. It gives you bandwidth throughput. It gives you amazing latency. It has all the ingredients you need to build an amazing cloud. So that's what we did. We built our own cloud and we put Rumble on top of it. Then we put Truth Social on top of it. And we continued to build until we launched it to the public. And now, acquiring Northern Data and putting that on is just, putting on that jetpack to the vision that we already had. So it's all been part of the plan to do this and become a major player in this space. Like all the big companies out there right now, their profit centers are in cloud, whether it's Amazon, they have Amazon.com, which isn't nearly as profitable as AWS. So it's like, it's the same model for us. And that's what we've always pursued. And that's what we always wanted. And I saw an article saying we did an Allbirds pivot and I was just like shaking my head. I'm like, okay, hold on a second here. We're acquiring a company with 22,000 GPUs that are going to generate revenue for us. We've built our own cloud. Like we're in this space deeply. Yeah. We've built one of the best video deployment latency systems out there. We built this. Like we didn't go to AWS to go put it together. We built something competitive to AWS to deploy it for creators like yourself. And this is like such an underappreciated thing that we've done in this company. And I think only now people are starting to finally see that. I think we got to put some quarters. We never guided. This is the first time we guided. I think, guiding between 87 and 93 million. I think if you ask someone if we were going to do that a couple of years ago, I think there's a bunch of people that say yeah, and there's a bunch of people that would say no. But at the end of the day, I think we're gonna just have to prove to the market that we're capable, that we can run this and we can build this and that we can grow it. And I think we have the best team in the world, both with the team that we acquired and the team that we currently have. I've seen the team that we currently have doing incredible things. And I've actually seen in the last year incredible things with the Northern Data team. Their utilization has gone up so much. They had to do a lot of work in the last year that I think has been very underappreciated as well. And I think we got to build that track record to the market so they can start believing in it. But that's what we're going to do. But that's a good question. I do wonder the same all the time as well. But this is real. There's real revenue here. There's a real business. There's a real cloud business. There's a real AI compute business. And now you're starting to see it in the financials for the first time. So I'm excited to continue to prove that out and continue to post records. We posted a record today, and we're anticipating to post another record in Q3. So we're going to keep stepping on the gas.
I also want to clarify, the record you're posting, it's not like, oh, we beat it by like 1 or 2%. It's like monster jumps on the record. It's not just like, oh, they like kind of edged it out. Like you said, all of a sudden, if you compare, let's just say 2024 to what you might do in 2027, a 3-year jump, you're talking about a magnitude of potentially, it's huge. It's monster
when
jumps.
You look at Google, they continue to post records as well. And they've acquired businesses like YouTube. They put all the right pieces in place and they created a behemoth. Our goal is to do something very similar to that. And I think we're executing on that, and we're starting to show the market it's real, and we're ambitious, and we got a team that can get it done. We're getting it done.
Yeah, this is how modern business. SpaceX got Cursor. That's everyone is trying to get what they perceive to be as good AI plays to strengthen their foundational setting. That's how business is done.
Another question: how important was it to issue formal guidance? I think it was really important. I think that. For a very long time, because of the volatility in video and advertisers, it was very difficult to guide the market. And now that we have Quake, it makes it a little bit easier for us to guide. And we're getting a little bit, we're getting the rhythm. This is the first time I ran a public company. We went public in 2022. So getting the rhythm and being and understanding the business really, really well and understanding the guidance is, I think, very important. We wanted to be ready when we did it. And I think we're ready now. And that's why we did it. So why was it important? It's something that a lot of people wanted to see. I think in order to get, the institutions to look at us, I think you kind of have to have this guidance. You have to show good track record. You have to show you have to show guidance, and you have to show the world where you're going and what direction you're going. So we're there now, and we'll see what happens. But we're excited. We're guiding between 87 and 93 for Q3, and that's going to be up from 40 in this quarter. So looking forward to where we land. See where we land.
Yeah, these jumps, more than double, 100% increase on record break, and that's wild.
All right, let's.
Chat's going quite
fast
going fast there,
fast.
team.
Why did we raise the age limit to 18 on Rumble? Simple answer. It's actually I think where were we prior to 18? I think it was I can't remember now, but I don't want to quote something that we didn't. One is that there's a lot of laws in the United States that are pushing to and proposing to go to 18. I think 17. It depends on where you are. But I'm kind of a proponent personally and it's not a personal decision, but I also don't think that like social media for kids or for young kids is the way to go. So I like to, on a personal level, I'm not a big proponent of that. And I think 18 is just is a good number for this business to work on, and especially with the laws that are coming out in different states and different parts of the world. It kind of it kind of inoculates any of those issues that we would have around there. So that's why we did that.
And they could be, I'm sure you see it because it's your business, but every other week there's a major social media play who get hundreds of millions of dollars of fines because of these types of issues.
Yeah, there's a lot of issues with that. And I'm
Yeah.
actually personally I'm against like children on social media. And I do not consider Rumble. Rumble's a video platform, but when it comes to like having kids on, sitting there on their iPads for hours on day, I'm just not a believer in that at all.
Gotcha.
I think that's I don't think it's healthy, and that's not something that I want to condone and be a part of. So
Fair enough.
what do you think Wall Street gets wrong about RUM? Chaos. All right, in Roswell. I've seen that name many times. Well, like I said, I think that I think they really underestimate our engineering teams. I think they might not clearly see the unmonetized assets and the value in that, and even the value in the monetized assets and where that can go. So I think that's there. And on the Rumble, that's on the Quake side, and on the Rumble side, I think that there's far more potential on the data and the monetization of the data for the creator community that is untapped and will be available in the coming 2 years with the robotic area. All right. Scroll up. Someone's asking about guidance on profits. So we decided, to start, we're going to stick to revenue, and we're going to stick to just the next quarter for Q3 on guidance. So that's what we're going to be doing. And we'll evaluate as we go forward whether or not we should expand that, and whether it's full year or adjusted EBITDA or whatever it may be. We'll continue to evaluate that. But for now, the focus is just on revenue. The guidance is just on revenue, and we're not guiding on anything else for that moment. What's the vision for small creators on Rumble? Well, actually, I think this is that's a really cool question. Maybe we should end on that one.
Okay.
But I think that for small creators has always been a passion of mine, and it's like not the easiest thing to monetize. On the small creator, it's much easier to get a big creator on the platform, get big ad deals. Same amount of work that it requires to monetize a big creator is to monetize a small creator. So the economies of scale just naturally always incentivize to do bigger creators, and they always forget about the small creators. And that you see that in the day to day, and it's irritating because you want to help the small creator community. And this is where I think AI is going to unlock this in a major way, because the value of data is not going to necessarily be eyeballs anymore. That's for advertising. So you have to look at the value of data in a different way. The value of data is going to be quality of content. It's going to be two-way conversations that me and you are going to have, or three-way conversations, how we're going to interact in a group and how you're going to interact on the streets with who you are. Because when you think about it, when we get to a point where robotics are going to start, at the very lowest level, doing very tedious tasks, to eventually becoming the most complicated robots out there that are going to mimic potentially humans. So to get to that level, you're going to need to learn, and robotics are going to need to learn, and they're going to need to learn from two-way conversations. They're going to need to learn from IRLs walking in the most random places in the world, going to the Antarctic, going random places, having conversations with people, having meetings with people, everyday living environments and everyday living is going to need, robotics is going to need, it's going to have a thirst for in order to learn and to get better. And this is where I think the unlock happens for small creators, because now the abundance of the quality of data that you can produce will have a higher value than, let's say, data that has eyeballs. And that will remove the incentive for, that advertising has to always look for the larger eyeballs rather than the 5 or 10 viewers, but look for quality content. And I think that's good. That could be a very big unlock to the small creator community, and to the creator community as a whole. Obviously, people that have large eyeballs, that have huge running chats and communications, that's going to be really valuable too, because they're going to see how people are reacting in real time, and they're going to learn from that. But I think the small creator unlock is going to come in this new era that we're going to see post this knowledge base era. I'd like to look at it as like a knowledge base era, and then we're going to move into the robotic era. And I think the unlock is going to happen there for the small creator community.
Man, I think that's incredibly insightful. Obviously, you spent quite a bit of time thinking about this, so I think that is a perfect place to end it. As always, from me personally, from the community, the fact that you take your time out to do this, that's a very rare thing within the world of publicly traded stocks, so obviously, thank you. Folks, if you enjoyed these types of talks, don't forget to subscribe. We're going to be at it again next quarter, and it sounds like some of these numbers might even be more jaw-dropping than this particular quarter, so definitely make sure you tune into that. Once again, thank you for your time, and I'm excited to do it again.
Looking forward to next quarter, we'll be back, and I hope you're back for the next quarter. We'll do the same thing.
Appreciate it. Thank you.
All right, thank you, Matt.